This is meeting number 33 of the Standing Committee on Finance. Orders of the day pursuant to the order of reference of Tuesday, April the 8th, 2014. Continuing our study of Bill C-31, an act to implement certain provisions of the budget tabled in Parliament on February the 11th, 2014, and other measures. I want to welcome our guests to the committee this afternoon for our first panel of discussion on this bill. We have presenting as individuals, we have Mrs. Stéphane El-Jarat. Est-ce que c'est correct? El-Jarat?
Yeah, correct.
Is that it?
Mr. Mark Tonkovich, associate with Baker & McKenzie. Welcome. We have from the Association of Canadian Academic Healthcare Organizations and Canadian Healthcare Association, we have Ms. Beatrice Kelleher-Rafoul. Welcome. Vice President for Public Affairs. We have from the Certified General Accountants Association of Canada, Ms. Carol Perceau, Vice President, who I understand will be her last appearance before our committee in his capacity today. Welcome back to the committee. And we have the President of the Search and Rescue Volunteer Association of Canada, Mr. Harry Blackmore. Welcome to you, sir. You will each have 5 minutes maximum for your opening statement, and we will then go to questions from members, and we'll begin with Mr. El-Jarat, please.
Alors, merci. Bonjour.
Thank you and good afternoon. I would first like to indicate that what has drawn my attention in the provisions is the amendment to 241, subsection 9.4, which deals with a breach that would allow the tax authorities to pass information to the police if there were, in their opinion, something that had been done that was illegal. I think that this is worthy of note because the Supreme Court has said in Slattery that
system, which is based on self-reporting. And we have to be careful in doing so, in opening that kind of a change by allowing the tax authorities to exchange information in a context where they believe a crime has been committed, that this will not cause an issue with the fundamental principles that underlie our tax self-reporting system. I'll be more than happy to answer any questions that this committee may have on my observations with regards to this particular provision, which is 23, which amends 241 9.4 of the Act. Thank you.
Thank you very much for your presentation. Now, Mr. Tonkovich, please.
Thank you, Mr. Chair, and thank you to the committee for the invitation to appear in front of you today. I've had the privilege of seeing tax disputes from many different angles, as a lawyer in private practice, as counsel to the Federal Department of Justice, and as judicial clerk to the Federal Court of Appeal. My current legal practice focuses exclusively on helping taxpayers resolve controversies with Canadian tax authorities. But I'm here today as an individual, and my comments reflect my personal views, not necessarily those of my firm nor our clients. Against this background, I'm pleased to offer whatever assistance I can to the committee as it considers parts 1 to 4 of the federal budget bill. But I'd like to take the opportunity to highlight 2 initiatives that stem from the budget. Canada is working hard to balance budgetary needs and foreign policy against the sophisticated tax planning that exists on the global stage. One continuing challenge is ensuring that the CRA has the tools it needs to maintain the integrity of the tax system while respecting the basic taxpayer rights of consistency, predictability, and fairness. After all, our society and our laws correctly recognize each taxpayer's right to arrange his or her affairs in the most business-savvy and tax-efficient manner. Returning to the bill, Bill C-31 contains provisions touching on 2 new information-gathering tools aimed at helping the CRA to achieve its mandate. The first is the introduction of the new Electronic Fund Transfer, or EFT, reporting regime in Part 15.1 of the Income Tax Act. The second deals with the CRA initiative today called the Offshore Tax Informant Program, or OTIP. The Department of Finance released legislative proposals relating to the new EFT reporting regime this past January, and the proposed rules are contained in Bill C-31. The rules will require most financial intermediaries to file reports with the CRA days after completing an electronic fund transfer of $10,000 or more, flowing into or leaving Canada at a client's request. The new regime includes detailed provisions defining which financial entities must submit reports, a corresponding record-keeping obligation for those entities, and the creation of an offense for the failure to comply with that obligation, and rules explaining that EFT information can also be used for non-income tax purposes. Although the CRA will need resources to properly monitor and analyze this new EFT information, the proposed regime will undoubtedly provide a fuller picture of traditional fund transfers across our borders. In turn, this will make it easier for the CRA to consider whether those funds have been properly accounted for tax purposes. Moving to the second initiative, the Offshore Tax Informant Program. This is a whistleblowing program that was first introduced or first announced in the 2013 budget and was formally launched by the CRA in January of this year. OTIP aims to pay awards of between 5 and 15% of federal tax collected as a result of tips provided to the CRA concerning major international tax non-compliance. Anecdotally, I understand that a number of would-be informants have already started approaching professional advisors and have begun opening informant files with the CRA. In contrast to the detailed legislative framework for EFT reporting, there are no legislative rules defining the new informant regime. There are a number of provisions in Bill C-31 that relate to the informant program, which I've set out in a schedule to my speaking notes. But these generally touch on how award monies will be taxed and how informants will be kept abreast of the status of their file. Otherwise, all rules pertaining to OTIP are left to the CRA. This includes who can be an informant, whether awards could be paid for information concerning domestic noncompliance as opposed to international noncompliance, whether there are limits on how tax information can be obtained, and whether an informant's identity will be protected down the road. Leaving the framework to the CRA is efficient in some respects. It allows the rules to be changed without the need to pursue legislative amendments, but it also falls short in certain other respects. For example, without legislative rules or regulations, the extent to which CRA policies can be relied upon or enforced by informants is unclear, as is the breadth of the CRA's authority to pay awards out of taxpayer dollars. There's also a lack of clarity concerning how information can be obtained and whether viable tips can or should be acquired by breaking the law or breaching professional or ethical obligations. An important public institution such as the CRA should not be seen as encouraging taxpayers or their advisors to cheat or steal to obtain potentially helpful tax information in order to make a buck. Finally, the scope of the informant's obligations in any future tax assessment or enforcement proceeding is unclear. It's also unclear as to what ends the CRA will go to protect an informant's identity. Legislated rules providing a certain degree of protection for informants would make the system easier to administer and more reliable for taxpayers. For these reasons, we propose that legislative rules or regulations would assist in bringing clarity to the program. Thank you, Mr. Chair.
Thank you very much for your presentation. We'll now hear from the Canadian Healthcare Association.
Good afternoon. Thank you. I'm the Vice President, Public Affairs of the new organization formed from the recent merger of the Association of Canadian Academic Healthcare Organizations and the Canadian Healthcare Association. We represent the institutional voice, the research hospitals, regional health authorities, their research institutes, community hospitals, and long-term care facilities. For the past 4 months, we have been known under the hyphenated version of our two names, and I invite you to stay tuned for the announcement of our new name, June 1st. L'Association apprécie l'invitation à comparaître devant vous.
The association appreciates this invitation to appear before you in your study on the Budget Implementation Act, and we are particularly interested in sections 56 to 60 of Bill C-31 with respect to hospital parking and also the GST, PST.
Parking were deemed to be taxable, whether provided by the private or public sector, including charities, as it was perceived that all supplying of paid parking was determined to be a commercial activity in order to maintain competitive equity with private sector suppliers. It should be noted that since the introduction of the GST, paid parking has been excluded from the general exempting provisions for supplies made by a public sector body for the purpose of the GST-HST. A PSB is a municipality, university, public college, school authority, hospital authority, charity, nonprofit organization, or government. Budget 2013 proposed 2 measures to clarify that certain special exempting provisions, supplies of the property or service that are made for free, or occasional supplies of paid parking by a PSB, such as those made as part of a special fundraising event. These would continue to qualify for the exemption. The Association of Canadian Academic Healthcare Organizations, on behalf of our members and the broader hospital community, immediately brought the implications of such measures to the attention of the Minister of Finance and through him the government. To the credit of the Minister and the government, implementation of these Budget 2013 elements was delayed. Mr. Flaherty and his staff recognized that the unintended consequences that they were being apprised of required further analysis. As well, the government recognized that these measures, at the very least, required more consultation. We assisted the government in this consultation process, and we thank them for that opportunity. A large number of hospitals across the country, although not all, had their foundations or auxiliaries as the operators of their parking facilities. These additional revenues contributed greatly to their donation envelopes for research, medical devices, medical equipment, patient care, and other important items that hospitals and research institutes require, all in the service of better care, better health, better value for the population they serve. In addition, it had been noted that the impact was not just the GST, but the full HST, where harmonization had taken place. The late Minister Flaherty's announcement on January 24th that the proposed amendments to the Excise Tax Act to provide an exemption from the goods and services tax, harmonized sales tax, for hospital parking for patients and visitors was welcome news to the healthcare community, and for the most part would reverse the Budget 2013 proposed measures. We are very pleased to see these amendments reflected in sections 56 to 60 of Bill C-31 and urge the members of the committee to approve these sections. I'm happy to answer any questions you may have. Thank you.
Thank you very much for your presentation. We'll now hear from the Certified General Accountants Association of Canada.
Monsieur le Président, Messieurs les membres.
Généraux du Crédit du Canada.
Chairman, honourable members, thank you for the invitation to appear before the committee to speak on Bill C-31 concerning the government's Economic Action Plan for 2014. We appreciate the opportunity. From the many appearances before this committee, you have come to know us well. CGA Canada is currently working with the Chartered Professional Accountants of Canada, CPA Canada, to integrate operations under the CPA banner. Unification will enhance the influence, relevance, and contribution of the Canadian accounting profession at home and
The CGA Canada recognizes the federal government's strong economic leadership to balance the budget and achieve a surplus in 2015. While this bill is deep and wide in its scope, includes a vast array of measures, and affects several federal acts, our comments today will focus on one measure. We support the proposal in Clause 31, Part 1 of Bill C-31 on outstanding tax measures. I initially thought that was a typo, but it is Clause 31, Part 1 of Bill C-31, which amends the Financial Administration Act. The purpose of this clause is to require the Minister of Finance to table annually in Parliament a list of legislative proposals. But this is not just any list. This list will include publicly announced proposals which have not been enacted by Parliament since the last federal election. While this measure is definitely a step in the right direction to better manage changes to the Income Tax Act, you have the ability today to further improve Clause 31. In its current form, this measure requires the Minister to report only the outstanding tax measures from the current Parliament. As a consequence, the list will not include potentially the outstanding tax measures which date beyond a Parliament. Committee members may want to follow the example of Bill C-549 introduced by one of your colleagues, the Member of Parliament Mike Allen. Similar to Clause 31, Bill C-549 amends the Financial Administration Act to require the Minister of Finance to table a report listing tax measures which the government publicly announced its intention to legislate. However, Bill C-549 goes further by requesting cumulative reports, as opposed to reports that only start from the last election. C-549 also requires a parliamentary committee to review the report tabled by the Minister and submit its findings to Parliament. We believe it would be preferable for the Minister of Finance to report all outstanding measures without making a distinction between past and present parliaments. A cumulative list of proposals would improve greatly transparency. As some of you will remember, it took 12 years for Parliament to pass the latest income tax technical bill. I'm of course referring to Bill C-48. It was almost 1,000 pages in length and enacted hundreds of outstanding tax measures. To this, we heard very loudly from many parliamentarians, never again. We agree. Canadian taxpayers deserve a more effective and efficient process to manage, introduce, and legislate outstanding tax measures. In this spirit, we recommend that you consider making a minor technical amendment to strengthen the intent of Clause 31 to ensure cumulative reporting of unlegislated measures. CGA Canada remercie le comité.
We thank the committee and appreciate that the House of Commons is recommended. We urge you to continue your seeking to reduce complexities and inefficiencies. And also we urge you to continue to champion this important issue, whether it's through the creation of an independent body or through a parliamentary committee. It is an important topic. We need a national dialogue. Taxation affects every single Canadian, and yet there hasn't been any meaningful discussion on it since the Carter Commission in the 60s. It's time now for parliamentarians, stakeholders, academics, and Canadian taxpayers to talk about tax reform. Mr. Chairman and distinguished members of the committee, thank you for your time. I'm going so fast that I can't get it out. I've been pressed by time here. I'm in too much of a hurry. So as I was saying, I thank the honourable members and the chair of this committee. We thank you for your time and we'll be looking forward to your comments and questions.
For your presentation, and I'm hoping that 1,000-page tax bill will take the place of purgatory at one point in my life. But we've done our time, yes. Thank you very much. We'll now hear from Mr. Blackmore, please, for your presentation.
Thank you, Mr. Chair. Search and Rescue Volunteer Association of Canada is a national organization representing all provincial and territorial ground search and rescue, known as GSAR associations. All of these associations and their 300 teams are made up of total volunteers. SARVAC is a federally incorporated charitable organization providing oversight, education and support. We foster, coordinate and encourage excellence in volunteer search and rescue organizations in Canada. Our vision is to have a national community of skilled search and rescue volunteers whose contributions are valued and supported by the public at all levels of government. SARVAC has over 9,000 volunteer searchers, team leaders and search managers who respond to an average of 1,900 calls a year. Combined, they volunteer 142,000 hours in searches, 63,000 hours in training, 10,000 hours in prevention, and 19,000 hours in community hours living in ground search and rescue every year. The Search and Rescue Volunteer Association in Canada, the Civil Air Search and Rescue, known as CASARA, and the Canadian Coast Guard Auxiliary are the three lead organisations for volunteer search and rescue in Canada. For many years, SARVAC has championed the provision of the tax credit to recognise the value of GSAR volunteers who give so much of their time and effort to searchers, training and maintaining readiness for search for missing people. The new Search and Rescue Volunteer Tax Credit is therefore truly recognised as a welcome benefit to GSAR volunteers who commit their time, personal time, effort and equipment to finding lost persons in their communities. The new tax credit is recognition of the important role played by search and rescue volunteers in contributing to the security and safety of our citizens and visitors to our country. For the purposes of determining the cost savings to a volunteer impart, a value of $25 was per hour was assigned to various government agencies. This is now 10 years old. This means that by using the skilled search and rescue volunteers, there's a huge reduction to the financial burden of government to carry out SAR missions. To be eligible to qualify for the new tax credit, a volunteer must have put in 200 hours or more of volunteer time. This will require all of volunteer time is properly documented to ensure that there's a clear supporting records are kept to show primary hours, which is searching, training, meetings and on-call, and secondary hours, maintenance of equipment and prevention, for a minimum of 200 hours required to qualify. 101 hours of these must be made up of the primary hours. GSAR volunteers place themselves in risk at any time they are responding to a search for a missing or lost person. Searches often take place in rough terrain, poor weather, and can happen day or night. Searchers are trained in search techniques, first aid, rescue, recovery, navigation, and survival. They offer themselves as a professional resource to the policing agency in Canada. Thank you very much.
Okay, thank you very much for your presentation. We'll begin members' questions avec Mr. Caron pour 7 minutes.
7 minutes, Mr. Caron. Thank you very much, Chairman. I would like to thank all of the witnesses, but first I'll begin with Mr. Tonkovich and Mr. Al-Shahat, because you were talking about the tax changes and also the whistleblower aspect. We have had a briefing session from the officials who tell us what was behind that. There was no indication that was given with respect to the change in the program. That leads us to suspect that this would be anonymous information that would be involved. But under the index program, there would be participation in the new program. How do you think that this will be officialized, if I can use that word, by the tax authorities? I think this is a good question that you are asking, but it can be answered at different levels. You know, the anonymous whistleblower program has existed for a very long time, and it operates quite well. There are always people who are disposed, without expecting anything from the state in exchange, they are disposed to provide information. At least that has been my experience. And I have learned that also from the administrators of the program. One important thing, though, for these people is anonymity. And with these lines, they want to be able to remain anonymous, to provide the information they have at hand. So to my mind, these are two different programs that you are talking about. Anonymous disclosure the person calls and says, I have an indication that this and this is happening, but the officialized program that would involve remuneration will require more work. People won't be remunerated without providing details on what they are disclosing. And of course, the disclosure can vary very much in nature. So you have two separate clienteles here. You have the people that would be disclosing for remuneration. That may well involve international exchanges, international undertakings, or you have the other type of situation where somebody calls because this person thinks that the neighbor is buying goods underhand or is doing something underhanded. So in actual fact, the two realities are quite different. I would like to hear an answer from your colleague on this matter as well, please.
There are two different types of programs. The indications from the Canada Revenue Agency is that both programs will continue. The anonymous program for those individuals who don't wish to make clear who they are or how they obtain this information, more of these anonymous tips just being received without any additional catches. The other program, the one that I had focused on, the Offshore Tax Informant program, has been officialized in the sense that the Canada Revenue Agency has released a number of rules and a number of guidance documents describing how the program would work. One of these is clear that it does require details as to who the informant is, where the information was obtained. My concern with regard to officializing it is that these are simply administrative guidance documents, and there are no clear regulations or legislative policies explaining how the structure will work, how anonymity against other parties would be maintained. And the lack of additional information in this regard is going to make it difficult for professional advisors or for would-be informants to decide whether to come forward, because it's not clear how far the Canada Revenue Agency will go to protect their identity. And frankly, providing this kind of information may come with other types of liability. If there's no clear rule as to how identities will be protected and so forth, then the program will not work as well as it could if there were clear rules on that.
Okay. Rapidement, en 30 secondes, chacun, si vous pouvez, ou 45 secondes.
In 30 seconds, each of you, because my time is limited, the provisions of the Act. I'd be interested in knowing how you perceive the provisions of the Act. The government is wanting to do something, but on the other hand, you have provisions that may well discourage people from giving these tips or being informants. Well, very quickly, I'm sure, though, we could talk about this for hours. This is probably a program that has been inspired by the IRS program that exists in the United States. And it's probably been drawn off that model with a lower payment, of course. Yes, lower payment. But you've given me food for thought. You've raised a variety of questions because there would be no protection, like my colleague has said. I totally agree with my colleague. It has to be clear that anonymity will be protected, and the amounts that are received from the agency, from the CRA, would have to be included in income. So that information may well force a person to have to declare it on their income tax declaration. Perhaps your colleague could answer this quickly as well.
Quickly. That's actually one of the potential concerns here is there are rules and suggested provisions in the bill to include informant awards, for example, in the informant's income, things of that nature. But this is only one side of the rule base. There is silence as to how the program itself will work and what kind of protections, for example, would apply to these informants, whether there's forms of privilege, that kind of thing that would go forward. And my concern is when I compare that to the electronic fund transfer rules, we have a fairly detailed legislative base there, and we don't have quite the same base on the informant side, and that may be something for the committee to consider.
Okay, thank you. Merci. Merci, Ms. Caron. We'll go to Mr. Keddy, please. 7 minutes.
Thank you. Thank you, Mr. Chairman. Welcome to our witnesses. Looking forward to good and robust discussion. I just want to continue on for a moment on the offshore tax informant and the difference between anonymous information and paid information. And I recognize the points that both Mark and Stefano have brought up. But, I mean, you're well aware that under the Income Tax Act, and CRA is criminally responsible for individuals' information. So obviously the system will have to recognize that, or government is responsible. So it has to be protected. But you're aware of the clause, I'm certain.
I'm sorry, just to be clear, you're talking about the fact that it's illegal for the authorities to release information under Section 241?
Yes.
Yeah, clearly it is.
Yep.
But we're also seeing that under the proposed change to Section 241.9.4, in certain circumstances, the information is proposed to the CRA would be able to provide that information to other authorities. So this being said, like I mentioned before, there are, like my colleague says, because there are no rules, I mean, there are all kinds of issues like third-party liability, lawsuits that people could face. And one of the points I was just trying to make as an example is that if the person is forced to include in their income the receipt that they got from the Canada Revenue Agencies for their help, if there is a lawsuit later, that person could be forced in civil courts to present itself under a subpoena with their tax returns, and that information then would appear. But there are other serious issues with regards to whether or not in all circumstances CRA would be able to protect the information. For example, if the person is charged for tax evasion, in certain circumstances there is an informant protection at common law that exists for police informants. But when innocence is at stake, also in certain circumstances that information must be released. So it's just not completely clear, and I agree that if the rules were set out in more detail as to how the protections would work, I think it would help that program function better. I definitely agree with Mr. Tonkovich on this.
Yeah. Go ahead.
Yeah, and I agree with Mr. Algerat, obviously. I think that we share a similar position on this point. I am certainly familiar about the rules prohibiting disclosure of taxpayer information by the Canada Revenue Agency. However, there are a number of exceptions to those rules, one of which is if it's necessary for the purposes of administration or enforcement of the Act. This is something that comes up particularly in the context of assessment and enforcement proceedings, when taxpayers who are covered by this confidential and anonymous information or non-anonymous information, if they've been assessed for taxes and the matter proceeds to court to collect those taxes, then those kinds of protections won't apply or may not apply. And my concern is, without including some type of provision making clear when the anonymity will be protected, when the identities will be protected, it leaves a little bit it leaves a gap there to decide when we're advising potential informants, and even if we're not advising it, it leaves a gap for the informants themselves to decide whether or not to come forward, because it's not quite clear how their identity will be protected down the road.
And I appreciate that, and I do have other questions, but I think it's worth repeating that the CRA has an obligation to protect all taxpayer information that is within their system. So if you take that as fact at the beginning, that would also go to mean that we're going to protect anonymous information and any information coming out of this new tax offshore tax informant legislation. Quick question: how much time do we have, Mr. Chair?
3 minutes.
Oh, I'm doing better than I thought. I want to just for a second. For Mr. Blackmore, thank you for being here today. I represent a rural coastal riding in Nova Scotia, so we've got a great relationship with our Coast Guard Auxiliary and land-based search and rescue and volunteer firefighters. We're a small town, Canada, in a big way, because the largest community in my riding is 8,000 people. So we're very rural. Like part of this budget that allows the combination of the search and rescue and volunteer firefighter tax credit for your body. Do you have any realistic opinion on numbers that could affect? Because for small communities Some volunteer firefighters may get 100 hours as a volunteer firefighter. They may get 110 hours in search and rescue, but they don't have enough of either one individually to qualify. So is there a number out there that...
Well, right now, under the 200 hours, you can combine it according to CRA.
Yeah.
So if you do have 100 and 110, as long as one is enough to make primary and secondary,
Yep.
they can combine the bottom and just claim once. So therefore, smaller towns, that's the reason they combined it, because the volunteer firefighters had this 2 years ago. And now this gives everybody a chance, because a lot of them were in between. And now most of them can hopefully avail of it through, with the program being combined.
Okay, thank you. Beatrice Kelleher, you talked about GST, HST on hospital parking, and I think that was one of those items that kind of got lost in the mix, if you will. But do you have any idea of an actual number that hospital parking is worth to hospitals? I was in the hospital parking lot 3 weeks ago, and I can tell you it was midday, and I counted the cars. There were 125 cars in the parking lot. That's at 2 o'clock in the afternoon at $3 a hit. I assume there's a lot more went in and out of there during the day, so it should be quite a good revenue generator for a hospital.
30 seconds.
Yes, in fact it was, and that was the reason when this measure sort of came out of the blue. The impact was severe. I mean, just in one province alone, the remittance of that GST, which would have been implemented sort of immediately, would have meant in the neighborhood, for example, in the province of Quebec, some $10 million just for the GST. So that's the 13% of what number? So this was very significant. And as I said, the minister had not fully appreciated. They were trying to close the loophole, but they hadn't factored this particular matter coming to light as it did.
Okay.
So, yeah.
Thank you. Thank you very much. Thank you, Mr. Kelly. Monsieur Dubois, s'il vous plaît, pour 7 minutes.
Merci, Monsieur le Président.
Thank you, Chairman. I would like to welcome all our witnesses this afternoon. And my first question is to Mr. El-Jarrat, because not so long ago in 2012, we were on a parliamentary committee, and Mr. Jarrat was representing his organization. At that time, we were talking about breaches of confidentiality, and knowing that the CRA has a great deal of power to acquire information, to go out and get information, and also there is this voluntary aspect of the Income Tax Act. With all the measures in this bill, C-31, well, the negative impacts could be enormous. And the agency, the CRA, has agreements not only with the Department for an exchange of information. When I was at the National Assembly of Quebec, the order of chartered accountants and the Quebec Bar came to say to the minister of the day that it was not the proper path to impose such a provision. One of them was Mr. Jarrat. There would be so many negative impacts if this were imposed in C-31. I would imagine that you're referring to the clause 241, 9.4. Is that what you're talking about? Yes. What I would say with respect to it is this. As I indicated in my opening comments, in Slatering at the Supreme Court, there is this system of self-contribution for the system to work properly and for Canadians to benefit from the system, and to have Canadians properly report their income. They have to do so completely. That information has to be confidential. They should not fear that it will be used in court proceedings or, for example, criminal court proceedings. There would be exceptions, perhaps, if you're thinking in terms of terrorism or something extremely serious. But what you have to bear in mind is that tax confidentiality has to be in place for people to supply honest information. Because a certain part of their income may not be declared. If they didn't have that certainty, that confidentiality would be maintained. In Quebec, as you have said, there is a similar type of provision. It is 790012 of the Tax Act in Quebec. And this could be changed, but only through the ruling of a judge. So if there were this intervention of a judge in a specific set of circumstances, it wouldn't be done automatically. But the intent would be to protect the police inquiry and also the tax information. Because the judge would be wearing two hats at the same time, in the sense that you have to protect the criminal inquiry, the criminal proceedings, and also the confidentiality of the tax information. If they are afraid and do not report all their income, or if they do so and at some point in time in the future they would be brought before the courts, the whole tax system could be imperiled. It could be jeopardized by a change like this. Therefore, nothing is gained if you have a measure that could lead to this type of slippery slope. This is what I'm saying to the committee. I think you should look to what was done by other jurisdictions, in this case Quebec. Include a judge in the process to maintain the balance between the new reality of the need to combat very serious crime, but also to maintain confidentiality. How much time do I have? 2 minutes? As you've just heard, Mr. Chairman, there's nothing clearer that I could say beyond what Mr. Jarrod has said. I could perhaps ask Mr. Tonkovich something about the denunciation, this system that is more or less copied from the American system. This disclosure system the fact that we have this type of disclosure system, would this perhaps be an attempt to try to get more income on the part of the agency?
A very reasonable inference to make. This is an attempt to get more tax revenue into the system. More accurately, I think it's an attempt to get tax revenue that may have otherwise escaped the system and should have been there in the first place. So certainly that is a way to look at the new offshore tax informant program, yes.
Ouais. Et je pense aussi que, bon, c'est...
And I think as well, the disclosure program that already exists should be looked at closely, perhaps by the Auditor General. That LEADS program that is in place, and it's been there for a while, as I say. It has been quite efficient in terms of the leads and tips that can be the result of a program, what can be done. I think it would be a good idea to have the Auditor General look into it. What do you think?
It does make sense to compare the efficacy of the existing program. If the Auditor General is going to do this, then I suggest comparing that as well to, for example, the United States program, how effective the new award program is compared to regular informants or anonymous informants that existed before that program was introduced.
Okay, thank you. Merci. We'll go now to Mr. Allen for 7 minutes, please.
Thank you very much, Mr. Chair, and thank you to our witnesses for being here. And probably no surprise, I'm going to start with Ms. Pressot. Thank you for your kind words, although I know my colleagues are going to remind me of this probably for quite some time after. But I do just want to save the chair from his purgatory, though. We want to make sure we do that. A few questions. last week, and I'm going to talk about the unlegislated tax measures, and last week in the committee meeting, I asked Mr. Cook from the Finance Department a few questions, and he mentioned that the Department of Finance keeps a public listing on its website of draft legislation which has been released for comment or provided to the public, and I understand that. Are you aware of any inventory that's kept out there of unlegislated tax measures that the public would have access to?
Thank you for your question. I did look at the transcript from last week's committee, and there is no inventory. There is not a list of public legislation that's out there for public comment. Although the legislation that is which is out for public comment is available on the website, but there is no list of unlegislated tax measures that have been announced in a budget but not been implemented.
Okay. Now, the other thing I asked him about was about the timelines. And based on the provision and the wording in the legislation of being, one thing that was good about it is that when you compare it to my bill, it actually brings it up to 18 months roughly before, so it's a good thing. So the first report that would be coming to the House of Commons would be in October of this year, 2014. And I asked him what happens after 2014. And my presumption is that with an election in October of 2015, that there would be a delay in some reporting, and then based on the wording of that government's initiative, when would we see reporting? Because one of my concerns I have would be that would we see regular reporting as a case where, for example, if there was a minority government elected, we might not see a report during the mandate of that minority government. So can you talk about the timeline as to when we would see reports?
Thank you. When we saw Clause 31 of C31, we had some concerns around the timelines, and we worked a table. And if for the committee's patience, I'll walk you through. So in June 2013, we had Bill C48, which removed that considerable backlog. Sometime this year, subject to parliamentary approval, C31 would be published, and then in October this year, we'd have an annual report. We'd have a report covering the fiscal years 2012-2013. That's what it would do. That's what this bill does. October 31st, 2015, presumably will be it will be right after the election campaign. After an election, there would be no list, no table. And October 26th, either there would be no report. So the earliest we would have the next report would be 2017, covering that period since the writ was dropped. So basically, over the next 3 years, you basically have a report covering 2012, 2013, and a report covering that period up to March 31st, 2016, that you'll have only in 2017. And I'm sorry, it's just this is the way that we work through the dates. The report that you'll get in October 31st, 2017, that Parliament will get, will be up to March 31st, 2016, but will not cover the period before the writ was dropped. And that's where our major challenge is with that, is that it's not we've called it cumulative, à défaut de meilleur mot, that's the word we've used, the problems that were identified by the Auditor General, the former Auditor General previously, was this issue that we were not able to pinpoint the backlog.
Okay. So in that basis, the last technical tax amendment we did was 12 years, and it had 900 and some pages, 983 or whatnot. In the absence of trying to get a regular reporting mechanism, which I think we all want here, these things will, I think, grow quite exponentially over the years. So one of the comments that he made the other day, there's identified 400 technical amendments, of which 250 were outstanding comfort letters, and they've gotten that down to that there's only 10 outstanding, but it seems to me there's still a backlog out there. So is it the view of CGA that we could see this exponentially grow over a period of elections?
It's the tendency. I mean, it is what it has. I mean, ideally, in a perfect world, what we would want is an annual technical tax amendment bill to be tabled alongside the Budget Implementation Act, and that would be the discipline that we would be aiming for, to have it on an annual basis. But that doesn't seem likely or even possible, and this is a good interim measure to shine a light on the problem, to understand, to see what the the backlog is, to understand what the backlog is. And there's sometimes some real reasons for backlog, lack of consensus, which is why we support the idea that the report tabled by the minister would be referred to a parliamentary committee to try to sort of sort some of the challenges out prior to formal legislation coming forward.
Can you comment on the challenges for small, medium-sized enterprises and others with respect to having a whole bunch of these comfort letters out there, and what are the challenges to just the ongoing business on a yearly basis?
Well, I think the main challenge is around uncertainty. I mean, our tax system resides on a retroactivity aspect. But retroactivity to 12 years, one major problem that we've identified when we came forward here on C-48 was the fact that taxpayers lose the right to appeal if the measure's not been legislated, yet it still has to conform to the measure. So that's the kind of legislative uncertainty that we need to eliminate from the system. So
your idea when you comment in your thing, a technical, you're just amendment, you're talking about an accumulative amendment type of thing. That's what you're referring to? So that the technical tax amendment that you were referring to in your speaking notes were actually cumulative, so make it that the report is everything regardless of the government.
Yes, we would have language to suggest. It really is removing the words, a few words out of that clause that would make it that the minister would not be restricted, would be tabling the retrospective, I guess, list of technical tax amendments. So that growing list from one parliament to another, or from one fiscal year to another.
Okay, thank you. Thank you very much.
Thank you, Mr. Allen. We'll go to Mr. Cullen, please, for 7 minutes.
Thank you, Chair. And I want to continue on this vein for just a moment with you, Madam Presso. Mr. Allen's bill is very interesting to us just in terms of what you talked about, the discipline of government, that you introduce a bunch of tax initiatives, but the follow-through. Can you explain for me in perhaps layperson's terms, you talked about uncertainty for small, medium businesses that your members deal with. What are the impacts of that uncertainty for small, medium businesses in Canada with all these unlegislated tax measures that are out there and existing that haven't been clarified?
I think when you look at the total cost of compliance of the tax system is an incredible weight on small, especially on small and medium-sized businesses. I wrote down a magic number here around the total cost of compliance. Only on a personal side is between $5 and $6 billion.
That's for personal tax compliance, but you're not talking about business tax compliance.
No, but if you bring it. Oh, sorry.
I could hear you fine. But for our interpreters, they have to lip read, and that's an incredible skill.
So that's only for personal income tax. But I think the challenge that we have from a small, medium-sized business is that the reliance keeps on coming off. I'm sorry, maybe.
It's things the CRA doesn't want to hear. They have power over our microphones. It's incredible. They can do that. No, they're out there. They're out there.
Usually the translators find that I speak very fast, so they may be chipping it off to slow it down a little bit. But essentially, it's about cost of compliance, is reliance on professionals to help them comply with the tax system, is the uncertainty, and it just adds to the burden.
Adds to that real cost burden. Governments like to talk a lot about the burdens on business in Canada with a general attention fixation on tax level, what the tax level is for small, medium businesses and what that impacts on business decisions. Are you aware of any estimates from the federal government as to what the tax compliance costs are for small and medium businesses in Canada? Has your organization or the federal government done any kind of assessment of what that figure currently is?
We've not done that assessment, and I don't believe there's a number out there. We can find out for you and get back to you. We might have. We've looked at. I know the Fraser Institute has done some work on the personal side, but not as much on the business side. I don't think there's a number out there.
This could be an interesting thing for this committee to, at some future date, explore, because having run a small business myself, you start to realize that when you hand it over to your accountant, that the costs aren't always the cost, depending on the complexity of what you're asking to do. Do we have a term for these, the extra? I'm just looking through this particular, and I think I should comment on process for our witnesses, because some of you have been at committees before. This bill is over 330 pages long. It has 30 separate sections. We're going through sections 1 through 4 right now in an hour and a half. Any pretense that this bill is getting proper scrutiny, I think you should remove yourselves of that idea. It's very, very difficult, I would suggest, for all committee members on both sides to actually have decent scrutiny over the implications of what is proposed in such a large piece, because so much is put into these omnibus bills, measures like yourself, Mr. Blackmore, that are affecting some Canadians in search and rescue, other measures that increase the complexity of the tax code, other measures around whistleblowers. And I'd like to spend some time here, Mr. Algerat. We've got two distinct scenarios in which we're imagining someone coming forward and say somebody's either cheating on their taxes, and this would be someone in your profession, someone from Madame Presso's group, or somebody maybe suspected of contributing to a terrorist organization. Are they distinct within the law? Forgive me, I'm not familiar with your world, so trying to understand, are those viewed differently by the federal government, or are those two scenarios accepted and considered in the same breath when dealing with the tax code?
Okay, I think here distinction has to be made. As you mentioned before, we had, in certain questions, addressed the whistleblower program, and within the whistleblower program, there's this new initiative from the government that deals with offshore taxes, and we were discussing the different difficulties that ensue from the fact that there's not sufficient rules to protect the confidentiality of the person providing the information. That's one thing.
Because just on that, the CRA says we will protect your confidentiality unless we can't.
That's right.
That's essentially.
If at least there was more rules around protecting the identity of the person, the information, because there are a lot of hurdles, which are, first of all, you have to provide very detailed information. That information has to be of high quality to get remuneration. That has to be included in your income with the proposed rules here. So you want to make sure that the person, if you want the program to work, you want to make sure that the person feels comfortable enough that their identity is going to be protected.
So let me follow that, and then we'll get to the second piece. But with $170 billion, and these are estimates that we deal with, sitting in these tax havens, offshore accounts that are not coming through to the Canadian government, the effort, the corresponding effort from the government, you would imagine would be equivalent to somewhere around $170 billion, right, which is a lot. And getting it right would also be very important. You wouldn't want any government to put into legislation something that would actually have a counter effect on exposing people who are illegally using tax havens. Is that your concern? Is that
no? The concern is at different levels. I think we're talking the level. If we accept the fact that, as a society in Canada, we're moving towards that American model, which, without giving an opinion on that, that we want to go there and want to encourage people to come forward and be paid for it.
Yeah, we want to pay people
the other
to come
program
forward.
exists before.
Right.
If we take that for granted, I think the concern that was mostly with this program as it's proposed right now, there's not sufficient rules to protect the identity of the person, and the CRA will do, I'm sure, they will do whatever they're able to do, but that doesn't, that doesn't protect the person from being sued by third parties. That all kinds of things can happen. That person might, and because of that, that person might hesitate before having to come forward with detailed information, because these are complex matters, international tax issues. Then they will have to include that in their income. To get 15%, they have to pay income, and they might think, well, it's not worth all their hassle if on top of it there's a risk that my name might be provided. That's my point.
So both on privacy and then on what compensation is being contemplated, you would argue as an individual that we could consider amendments to this legislation to actually get to the goal we are seeking.
Very briefly, please.
The answer is, again, if we take for granted we want that kind of program, and yes, I think that if you're going to pay, the incentive has to be high enough for the person to take the risk of providing that information.
Thank you. Thank you, Mr. Cullen. We'll go to Mr. Adler, please.
Thank you very much, Chair. Thank you, witnesses, for coming today. I do want to pursue with Mr. Tonkovich and Mr. Algerat. Talk a bit about the integrity of the tax system, which you two are experts on. And nobody is disagreeing with the fact that I think in principle what you're saying may be correct. At 15%, people are going to be a little less risk averse, is what you're saying, to expose themselves to that kind of a scenario. Is that correct?
That is correct. If you take into consideration, like I said, take it for granted that we accept that's a program that we want in Canada. I'm just saying that if you compare it to the U.S. model, they're paying much more. And what I'm saying is, if you consider that you're dealing with offshore tax matters and international tax issues, which are quite complex matters, I'm saying that it will require a lot of work, so the person might think twice about providing information for so little incentive financially.
Where would you peg that figure? If you were the Minister of Finance, where would you put that?
Well, again, it's difficult for me. It's a personal opinion.
Where does the U.S. have it?
They have it at 30, I believe, at 30%, if I'm not wrong. 15 to 30, right? Yeah, 15 to 30%.
Okay, and other OECD countries, where are they at, the sort of general average?
To my knowledge, not a lot of OECD countries have whistleblowing programs of that nature, but I wouldn't pertain to have the answer to your question.
So in principle, you're not necessarily against doing this. What you're saying is that you're just against having the threshold so low.
Well, there's two things. I do have a fundamental issue at another level, which is there's two things that this program seems to want to aim at. It's on one hand abusive tax planning, and on the other hand tax evasion.
Is it abusive or aggressive? Abusive, you said?
Abusive or aggressive, or aggressive tax planning.
Okay,
yes.
but it's not illegal.
It is illegal. It's just not criminal. Tax avoidance is legal.
Right.
Then abusive tax avoidance is illegal,
right,
but not criminal. And then you have tax evasion.
Tax evasion, that is criminal.
Yeah.
Yeah.
What I'm saying is, I think that as on a personal opinion, I think that tax evasion, whistleblowing programs should aim tax evasion or criminal matters and not
right,
civil tax matters, such as abusive tax planning.
Okay. Now, would you agree that our government has been effective at enhancing the integrity of our tax system, closing tax loopholes, and because we've closed 85 of them since 2006. Is that a good thing in your mind, or?
Yeah, of course it's a good thing. I mean, as a Canadian taxpayer, we all want to make sure that all taxes are paid in accordance with the Act. There's no doubt about that. So anything that CRA does to legally collect monies that's owed to all taxpayers is a good initiative. Okay. The issue is just on the means. How do you get there?
And the reason why it's a good thing to close those tax loopholes is because?
Because
everybody should be paying their fair share, right?
Everybody should be paying their share, but on the same principle, we accept that in Canada it's legal to plan your affairs in accordance with the Act. So as long as you're obviously are arranging your affairs in accordance with the Act, then there is no issue. But if you're abusing of the Act, then of course that would not be acceptable.
Okay. Mr. Tonkovich, things like, the OEC talks a lot about base erosion and profit sharing and all of that. Could you talk a bit about that in the Canadian context and how effective we've been in the last, particularly 2 years, in confronting that problem?
I can, but I'll preface that with saying that it's an ongoing issue and an ongoing discussion for all of the OECD countries.
Correct, yeah.
I appreciate your comments about the loopholes that have been closed, this type of thing. I would observe that some of those are not necessarily loopholes in the sense that something was missing. They may represent shifts in policy where Canada now thinks that and has this position that these types of practices should not be permitted. But certainly there has been a lot of activity to try and close these perceived loopholes with a view to improving the integrity of the system and making sure that less escapes the system where the position is that it shouldn't be leaving the country without paying tax.
So compared to other OECD countries, how are we doing on that front?
I think that we are one of the leaders in the OECD as far as trying to think about and consider ways to address these issues. But the OECD countries as a whole are very active in this issue, and I think we're all proceeding on that basis.
Yeah, and Canada's doing well, considering that all the OECD countries are pursuing this with a vengeance.
I would say Canada is doing well in thinking about it, yes.
Okay. In terms of fiscal savings or monies that were brought in, it was, earlier it was referred to by Mr. Dubourg about the government just wanting to get their hands on money, and it's more about people and corporations paying their fair share of money, right? Paying their fair share of tax. Is that correct? It's not about governments wanting to put their hands on more money. It's just about obeying the law as it stands.
I don't see those as different. I think that they're underlying all of these tax policy choices is the view that everybody should pay their fair share. And where the fair share is set depends on who you ask, which kind of provision we're dealing with. It is an attempt to bring in more tax dollars because this is one of the mandates of the Canada Revenue Agency. It's not to say that they're doing it necessarily without some substance, without particular
rules. They don't act
rules.
outside of the law, do they? They have to act within the parameters of the law that they're given.
They are to act within parameters of the law. Sometimes there are exceptions, but it's a large organization that is carrying its mandate, yes.
Exceptions, what do you mean by that?
Sometimes, like with any organization, there are attempts to get additional tax dollars in creative ways, in creative interpretations of particular tax rules. These follow the process and eventually work their way into the courts, and then judges decide whether the CRA's interpretation was correct or the taxpayer's interpretation was correct. But as a whole, all of these regimes are aimed to make sure that dollars that should be in the tax system remain in the tax system.
Okay, thank you. Thank you, Mr. Adler. We'll go to Mr. Rankin, please.
Thank you, Chair, and welcome to the witnesses. I'd like to start with Mr. Tonkowicz just a bit further, if I could. You spent a lot of time talking about the offshore tax informant program and concerns about confidentiality being provided to informants. I would just like to drill down a little further on that. You say that there are CRA guidance documents, but not, I think you put it, legislative rules defining informant protection. And then we have the common law informant protections that I think Mr. Elzerat referred to. I guess my concern is it that you're looking for clear rules that are kind of written into regulations of the under the Income Tax Act? Because if so, is there a concern that they would have to be amended every time in order to give you the comfort that you need when the circumstances change? I mean, you have flexibility versus clear rules, and I just wondered if you'd speak a little longer about that.
Certainly. I think that, and you will all know this better than I will, being so closely involved and part of the legislative process, but with any kind of system of new rules, we're creating a new regime, or proposing a new regime here. There is a set of overall rules, a framework, if you will, that could be introduced, and this provides basic fundamental propositions about how the system works. And then to the extent that you require additional particulars in any given situation, there may be room for administrative discretion. There may be room for Canada Revenue Agency guidance on the particulars. But most of the time, when this kind of regime is introduced, it's done by way of an overarching framework and then allowing the CRA or another tax authority to drill down and provide particulars. This is how the whistleblowing regime works in the United States. There are legislative provisions in the Internal Revenue Code that give rise to that regime, and then there are regulations below it, and there are IRS guidance documents that delve into the particulars. And my comments earlier have to do not only with the informant confidentiality, but with providing a framework for the whole of the regime to make it easier for informants to appreciate how this thing is going to work, and to make it easier for advisors to advise them as to how things will play out down the road.
Merci. Ma deuxième question, c'est pour M. Elzerat, s'il vous plaît.
My question is for Mr. Elzerat now. As you know, the provisions of the budget deal with the LEADS program under the CRA. We know that there is some $200 million being cut, and some 250 positions are at risk. We see this change in the country because the CRA has been told, rather, to increase its reach to recover as much money as possible. What do you understand from all this? Well, the American program is something that is related to the Exchange Commission, and all the American agencies have long established programs, paid programs, where there is a framework for helping the authorities. In Canada, this is something quite new. We've had the LEADS program, of course, which is an anonymous one. It's still in place, but now people would be paid to do certain work to essentially potentially acquire more revenue, because when you deal with this, if it's a matter of international tax evasion, it's those who are best placed in Canada. But now it would be an instance where you would be handing over to a third party to do that type of work. It would no longer be, say, the CRA. It becomes quite complex. So everybody understands what tax evasion is, criminal tax evasion, but there are other things that are more.
2.5 minutes.
All right. So you talked to Mr. Adler, I think Mr. Tonkovich talked about our 5 to 15% range for tax collected and for the tipsters, if I can say that, and the Americans are 15 to 30%. But I think you suggested, one of you, I can't recall whom, that the OECD countries some of them don't even do this. Have you any reason why they haven't chosen to follow that path? Do you have any reasons that you understand why they don't share that policy?
Well, I think it goes back to maybe the comment that was made earlier with the issue of culture. I think in some countries it's the whole aspect, especially in European countries, the whole aspect of whistleblowing is something that is not very enshrined or very well looked upon. So I think culturally, I think that's why it is different. In Canada, I think we're moving closer to the U.S. model from that perspective.
Do you agree?
I would agree with that. I think it is a cultural point of view. I would comment that the United States has even more advanced systems than this in certain tax-related whistleblowing contexts. In the customs context in the U.S., a whistleblower would actually do some of the background work themselves and would file suit on their own behalf against the potential tax evader or avoider, and then the U.S. authorities, if they believe in the suit, if they agree with pursuing it, they would take over the suit. So there's a range of involvement out there. I do believe, as my colleague had mentioned, that many, or if not most, of the OECD countries do not have a system like this, and it probably is a cultural divide.
Okay. All right. I'm going to then ask Ms. Prousseau for her last welcome, one of your last presentations. You of course, work with the Certified General Accountants Association of Canada, and as you know, the Budget Implementation Act does not review the small business hiring tax credit. CGAs are well aware of the impact of tax measures on small business. So I'd like to know how you feel terminating the small business hiring tax credit will impact small businesses financially. Seems to me that would come as a blow to them.
Thank you, Mr. Rankin, for your question. Actually, it's not something that we've looked very closely. We try to refrain looking at specific tax credits for the simple reason that when we look at a tax simplification agenda, we're looking at trying to minimize and streamline tax credits, see if there's other ways of putting money back into entrepreneurs or small business pockets that are not related to tax credits or specific or targeted tax measures. And we were talking earlier about the cost, and we're looking at about cost for SMEs around the same cost for compliance, according to the Federation of Independent Business, about $6 billion. So I think if you weigh that against the hiring tax credit, I think there has to be some balancing out of showing how do you look at the tax system and make it more efficient and make it more fair in the sense that make it more fair and make it so that everyone sort of pays their fair share, but on the second hand, that it doesn't cost too much to comply to it.
Thank you. Thank you. Thank you. Thank you, Mr. Rankin. Mr. Leung, please, for your around 7 minutes.
Yes, thank you, Chair. I wish to address my question to Ms. Rousseau, and just to set the frame of this, some 40 years ago, I was in public accounting, one of the big fives, and then subsequent to that, I was also a director of public corporations. I have experience dealing with management reports, announcements, and so on. And throughout this entire period, is this evolution of looking at how our tax act went from pre-1972 from a quarter of an inch to about 2 inches, to the stacks of interpretation both in FASB, IAS, and so on. I think, I think this is what kept more than one accountant employed. I'd like to hear your thoughts about something quite simple, and is that can we go back to a cash-based accounting for one? And if not, because we do have this issue of having to handle a lot of accruals, and because government wants to be in there to make the system fair, we start having assets. And one of the things that I think that would really help is that if we do a revaluation of assets across the board every 10 years, so that we are now dealing with a base 100 every 10 years, so that we don't have to go back and deal with assets that are sitting in the closet, or that probably we have lost the original documents for. So for those two specific points, I'd like to hear your comments into how we can simplify the Tax Act. Because I appreciate the fact that what Mr. Allen's proposal is to, well, let's bring all these things up, because every time we go for a budget, we're saying, oh, what's missing and what's not missing. Well, let's simplify all that and to do another evaluation.
There are some people in this room much better qualified than I am to answer to those very specific questions you have, but that's certainly some of the ideas of going to a cash-based accounting would simplify methods. But when we're looking at tax simplification, and we do have how big it's grown, and not only has it grown when we talk about the uncertain part, the gray pages in the Income Tax Act being large in the actual income tax, but we look at about 5 ways of looking at it, and I'm going to answer your question in a very circuitous manner. We're looking at a system that would be fair to all groups, efficient, least cost to administer. We've talked about that. Simple, and that's where it has clear rules. Business is complex. When we talk about tax simplification, we're not talking about making it simple in the sense of minimizing and not. Business is complex, and I just look at some of the measures in this legislation, some of the measures regarding, hospital parking. These are 4 or 5 clauses. These are complex issues, but there are simplified methods that we look at, and of course the certainty that we talk with Clause 31 and competitive as compared to other OECD countries. So I'm not answering your question because I can't, but I'm telling you about the 5 or 6 ways, 5 ways by which we would see a simplified tax system.
Okay, then I also wish to address an issue about tax havens, because I've dealt with Cayman, BVI, Tonga, Hong Kong, Singapore, Labuan in my past history. And it seems to me that if we keep taxes at the lowest that we can, then Canada itself should be the tax haven, and therefore we don't have to deal with any of this problem, because the only reason that people use tax haven is to seek a lower tax jurisdiction. So, we are already at 15%, one of the lowest tax jurisdictions, even compared to Hong Kong, 16.5. Well, my proposal is there any benefit in harmonizing, or at least get the provinces to harmonize our tax system federally, so that we now have one uniform tax system apply across the board for all of Canada? Your comments, please. Mr. Algerard, please.
You're asking a very charged question coming from Quebec to ask that question, and I think it's a difficult question to But this being said, in general, harmonization, of course, is something that should be viewed upon with a positive light, because it simply is helpful in the sense that we are in a global economy, and Canada is competing with the others, and we need to make sure that we have the most competitive tax system to encourage investment in Canada.
So maybe in future parliaments we should aim for that. And Mr. Tomkiewicz, did you have a comment on that?
I agree. Harmonization is something to strive for. It will make the environment simpler, and on the government side, it will make administration easier and cheaper, frankly. But I think we all know that this can be a long set of discussions, and different provinces, different authorities will have different views on exactly where that harmonized system should sit.
Sure. May I ask one more question? Okay. My last question has to do with, in Canada, we look at the entire tax pie. We now collect more taxes from individuals than we do from corporation. But if you look at other jurisdictions, like I believe Taiwan and Hong Kong and Japan, their idea is, no, it's hard to go after the individual for taxes. Why don't we go after corporation? So most of the taxes is taxed at the corporate level, and when it comes down to the individual level, there is a very high threshold, like 25,000, 30,000, that you're exempt from tax. Do you believe that would simplify our tax system? Ms. Burrow. So in other words, pick up more of the taxes the revenues from corporation rather from individuals?
Well, it's about being competitive. I mean, it's about being competitive with other trading partners. It's about being competitive to attract businesses here that creates jobs, that employs taxpayers, that pay taxes and put money back into the system. So I think those are important policy choices. So I think our associations have a position on that. But if you were to ask me what I think that's part of the discussion we have to have around what is the appropriate balance of taxation, and is everyone paying their fair share, and how do we define their fair share?
Mr. Tonkovich?
There's also the theory, and I don't think that there's a conclusive answer to any of this, but there's also the obvious theory that taxing corporations is really going to be a tax on their shareholders, or really going to be tax on consumers that all passes through. So I agree with my colleague. This is a complicated tax policy question. The goal has to be to make sure that we bring in enough revenue to keep the system running while making it as competitive a place for business to attract more investment from outside.
Gerard?
Well, I tend to agree on this for sure. I mean, Canada wants to make sure that its tax system is as attractive as possible. Again, repeating that we are competing in this global economy with other countries that are taking all kinds of measures with different points of view and different policies. By the end of the day, we have to make sure that we keep on top and be attractive for investment.
So my closing conclusion is that as long as we keep Canada as the low tax jurisdiction, then we are on the right track.
That I agree with.
Okay, thank you. Thank you, Mr. Leong. I'm going to take the next round. I wanted to start, Ms. Kelleher-Raffo. You've talked about the situation with respect to the GST, HST, and hospitals. And I appreciate your comments there very much. I just wanted to know, if you or your organization, do you have any comments on the expansion of the medical expense tax credit in this piece of legislation? Is that something that your organization has looked at in terms of this bill?
No, we have not looked at it or taken a position as an association on it.
Okay.
So I can't comment.
Appreciate that. If you do have any further comments to the committee, please feel free to submit them.
Great. Thank you.
Appreciate that. Next, just a quick question for Ms. Persaud. In your opening statement, you talk about an amendment to really encapsulate what Mr. Allen put in his private members bill. Do you have an amendment or a suggested wording that would change this Budget Implementation Act to ensure that we are capturing the intent of that legislation, of his private members bill?
I do, and I'm just going to turn to Clause 31, and it would be just by striking at 31, 162(2)A, striking the words after the last general election, and that would probably fix it.
Just striking that phrase from...
Yeah, after the last general election, and...
Okay, I appreciate that very much. Next, I wanted to move to Mr. Tonkovich. In your opening remarks, you talked about... and I tend to agree with Mr. Keddy in this. In your third point, you said it's also unclear to what ends the CRA will go to protect the informant's identity. So what do you see as necessary, either from a legislative or regulatory or policy point of view, in order to do that, in addition to CRA's mandate that it has right now?
Well, I think that one concern with that is there is a statement in the context of the CRA's guidance documents that they will work to protect the identity, and I'm not sure what the phrasing is, but it's to the effect of to the extent possible, something like that. I think that this is a good start, but at the end of the day, it is simply an interpretation. It's simply a guidance document that's been posted on their website. There are limited ways that taxpayers or informants could enforce those types of statements, and including even a statement of the same type of principle in a legislative provision or in a regulatory provision will give that much more comfort. However, there are ways to beef up that kind of protection. The Income Tax Act itself defines protections like solicitor-client privilege. There would be the ability to extend a broader protection in a legislative provision saying the identity will not be disclosed except in these types of circumstances. I think that this is a policy choice to decide precisely how far Parliament wants the protection to go. But I think the point is that the choice should be made rather than simply leaving it as a vague comment, may or may not be enforced against the CRA.
Now, you're in your schedule, Todd, I mean, I have your opening remarks here. But your schedule here just simply relates to the provisions in this particular bill. These are not suggested amendments to the bill.
That's correct.
Do you have suggested amendments to the bill or things that the committee should consider?
I do not. I may be able to put something together if that will be of use to the committee.
Okay, I would appreciate that. The next point I wanted to raise is that you say an important public institution such as the CRA should not be seen as encouraging taxpayers or their advisors to cheat or steal to obtain potentially useful tax information in order to make a buck. Can you expand on that for me?
Certainly. The concern here is that there are obviously different ways that informants could obtain the information that may be useful to the Canada Revenue Agency to go after tax avoiders. It could be in the context of a professional relationship. It could be a lawyer-client relationship. It could be a CGA relationship. It could be any number of professional advisors. It could also be employees that are part of that offshore organization or Canadian organization that has an offshore office, for example. And because there are so many different ways that this information can be obtained, it's not clear whether there are any limits to how that information is obtained. It's not clear whether the Canada Revenue Agency will have concerns with stolen information, stolen hard drives, or whether it should have concerns. But this, again, is another policy decision that should be made if there are any limits that the CRA wants to put on the type of information that can be used, because it's one thing to say we want whatever kind of information would help us go after these tax avoiders, and it's another thing to say, listen, there are still practical limits here. We don't want the informants to be viewed as agents of the CRA who are going out and stealing those hard drives if that's something that the Parliament doesn't want to happen.
Now, does the U.S. or other jurisdictions, do they have limits? And if so, what limits do they have in place?
They do have limits. I'm not able to speak to a full extent as to what those limits are. I believe that most of them have to do with how involved the informant is in the particular tax avoidance work or the tax evasion. And if they are involved, if they are personally benefiting, then there are limits on what kind of awards could be paid out. But again, this is another policy decision that should be made. The only example that comes to mind in the criminal context, which is different than the civil tax avoidance context, there is a balancing that takes place between how information or evidence is obtained and how it should be used against a particular individual. And this may be a situation where a similar type of balancing, perhaps with some overarching rules, would be useful.
Okay, I've got about 30 seconds. Mr. Eldrat, do you want to address any of that, or do you largely agree with Mr. Tonkovich?
Well, on your question on protection of informants, I think that there is going to be a distinction to be made between the informant who provides information in the context of tax evasion, which is a crime, which would benefit from the police informant protection at common law, which courts have a duty to enforce unless very special circumstances where innocence is at stake. Where it becomes more difficult is when we're talking about informants who will provide information in regards to abusive tax planning and that type of nature, which is of a civil nature. That protection would not apply, and therefore there should be protection. If they're going to have real protection, that protection should be provided by law. And like my colleague, Mr. Tonkovich, just mentioned, I think it's important in order, if the Canada Revenue Agency wants to encourage people to come forward, people have to know what they're getting into. So amendments in that regard would be helpful.
Okay, I appreciate your comments. I want to thank all of our witnesses for being here this afternoon, for appearing with respect to this Budget Implementation Act. And if you do have anything further for the committee to consider, please submit it to the clerk. We'll ensure that all members get it. Colleagues, we'll take a break for a few minutes and we'll bring forward the next panel. Thank you. Call this meeting back to order and encourage colleagues in our next panel to take their seats, please. We are resuming discussion here of Bill C-31, an act to implement certain provisions of the budget table in Parliament on February the 11th, 2014. We have at our second panel here this afternoon evening, we have 4 individuals presenting. First of all, from the Canadian Cancer Society, we have the President and CEO, Ms. Pamela, I always forget, is it Freilich or Frolic? It's Freilich. Freilich, okay. Welcome back to the committee.
South Shore. Good
we
South
have,
Shore name.
from the Canadians for Tax Fairness, we have Mr. Dennis Howlett. And we have from GrowthWorks Atlantic Limited, the President and CEO, Mr. Thomas Hayes. And as an individual from Victoria, British Columbia, we have Professor Lindsay Tedds. Ms. Tedds, can you hear me okay in Victoria?
Yes, I can. Thank you.
Okay. Welcome. Thank you for being with us here today. You will each have 5 minutes for an opening statement, and then we'll have questions from all the members, and we will begin with the Canadian Cancer Society.
Thank you very much, Chair, honourable committee members. We do thank you for the invitation to testify today. We strongly support the tobacco tax increase included in the federal budget and in Bill C-31. This measure will reduce youth smoking and it will save lives. It is that simple. Higher tobacco taxes are the single most effective strategy to reduce smoking, especially among youth. We want no new smokers. We urge all parties to support this measure. In fact, the increase to federal cigarette taxes in Bill C-31 of $4.03 per carton of 200 cigarettes is merely an inflationary adjustment, though a very much needed adjustment. Prior to this change, there had not been a net increase to federal tobacco taxes since 2002, a stretch of fully 12 years. This meant that the real federal tobacco tax rate was actually decreasing once inflation was factored in. There is a vast body of worldwide evidence that confirms the obvious, that as tobacco prices go up, tobacco consumption goes down. The studies show that a 10% increase in the after-inflation price results in a decrease in tobacco consumption of about 4% and even more with youth. The tobacco tax increase is a win-win, benefiting public health and public revenue. Tobacco use and tobacco-caused disease and deaths will decrease, and almost $700 million in incremental annual federal tobacco tax revenue will be generated. Let me address the contraband issue. Many associations funded by the tobacco industry responded to the federal tobacco tax increase by referring to contraband. These organizations have a long history of opposing tobacco control measures. Here are some facts. Contraband has decreased substantially in Canada, as admitted by the tobacco industry. In our binder, which I hope you have, tab 1, a graph from the British American Tobacco says that Canada-wide contraband was 17% in 2006, 22% in 2007, 33% in 2008, and then down to 19% in 2010. A graph in that same tab from Philip Morris also indicates a declining trend. As well, federal and provincial government tax-paid sales data for these years, as well as subsequent years, confirm a dramatic decrease in contraband. Tab 2 of our binder shows a massive growth in price-discounted cigarettes sold legally by tobacco companies. The tobacco industry has reduced prices by $20 or more per carton on some brands, and the federal tax increase of $4 per carton counters only part of this. Tab 3 of our binder contains a graph showing provincial and territorial tobacco tax rates. Tobacco taxes are far higher in Western Canada than in Ontario and Quebec, yet contraband volumes in Western Canada are minimal. This graph illustrates that the cause of contraband as we have it in Canada today is not high tobacco tax rates. Higher tobacco taxes and low contraband are both possible, as the Western provinces have shown. There's no doubt that additional contraband prevention measures would have a further beneficial effect. We support the announcement in the budget for an additional $92 million over 5 years for contraband enforcement, and we continue to endorse Bill C-10, the Tackling Contraband Tobacco Act. As well, we have other recommendations for contraband prevention. First, The RCMP should pay more attention to blocking the supply of raw materials such as leaf tobacco, cigarette paper, and cigarette filters intended for illegal factories. Second, the federal government should modify plans to move the Cornwall border post to a new location in Massena, New York. Instead, there should be a two-part border post with checkpoints in both Massena and Cornwall to better intercept contraband. And third, the federal government needs to persuade the U.S. government to shut down the illegal factories on the U.S. side of Akwesasne. Thank you. The tobacco tax increase and contraband prevention measures in the federal budget are essential components of a comprehensive strategy that should also include 1, a ban on flavored tobacco products, 2, plain packaging as has been implemented in Australia, and 3, sustained, well-funded programs by Health Canada. Tobacco use remains the leading preventable cause of disease and death in Canada, killing more than 37,000 Canadians each year. Smoking is still responsible for 30% of all cancer deaths, and there are still 5 million Canadians who smoke, and too many children. I will finally comment as I close my presentation and express support for another measure in the federal budget, lotteries, the proposed legislative change to allow charities to use computers and other modern technologies in their lottery ticket sales and operations. It will reduce administration costs and allow the Canadian Cancer Society and other charities to direct more money to their important program services and research. Thank you so much.
Okay, thank you very much for your presentation. Now we'll hear from the Canadians for Tax Fairness, please.
Yes, thank you for this opportunity to comment on the parts of Bill C-31 related to tax havens. We support the implementation of several measures which aim to go after tax cheats using tax havens announced in the 2014 and 2013 federal budgets that are contained in Bill C-31. But we feel these limited measures do not go far enough in dealing with what is a growing problem. We would like to suggest some additional measures that should be considered if the government is serious about going after tax cheats using tax havens. First of all, we welcome the improvements to the Canada Revenue Agency's ability to provide feedback to the Financial Transactions and Reports Analysis Centre of Canada and to law enforcement agencies. These are fairly minor changes, but they will help make their enforcement more efficient. There may be some reduced privacy aspects here, but we feel they are justified in view of the social benefit and as a whole. Secondly, the reporting, some of the changes on tightening up provisions, regulation of electronic transfer of funds are also a welcome step, especially including casinos, which are a preferred method of money laundering. Tax cheaters and organized crime syndicates are always trying to find ways to circumvent the regulations, so it's logical that the government should be always trying to stay a step ahead and close off any holes in the monitoring system. Third, the offshore tax informant program. Information from informants is one of the ways in which tax authorities are able to lift the veil of secrecy that is the hallmark of tax havens and identify individuals and companies that are evading paying their fair share of taxes. But we should not expect that this program is going to result in that many convictions. The U.S. IRS Whistleblower Office just published a 2003 report that shows the U.S. collected $367 million as a result of whistleblower information from just 6 cases last year. There were 12 cases in 2012 and a slightly larger amount of money collected. Canada is roughly 10% of the U.S. economy, so we are not likely to see more than a few cases in a year. And the U.S. Whistleblower Annual Report also notes that cases typically take 5 to 7 years from receipt of submission to be settled and claims paid. So it may be a number of years before we will see any tangible benefits to Canada. In the U.S. case, but maybe the most important aspect of this measure may be the deterrent effect. which will be hard to quantify. But in order to maximize the deterrent effect of this measure, the government needs to do a more energetic job of public promotion and education. This is one program where spending some public advertising dollars, raising awareness about this program, would be justified. The other issue that needs to be addressed is the protection of confidentiality of whistleblowers coming forward. I have personally been contacted by several potential whistleblowers who are seeking information on how they should go about accessing the offshore tax informant program. But they were very worried about their safety. So I know that there are some provisions to protect tax confidentiality, but the CRA website does not give adequate assurance, and the government needs to do more to reassure potential informants. The tax haven problem is growing, as we have recently shown in Statistics Canada report on direct offshore investments abroad. They're up 10% over last year. Some of the additional measures that we feel are needed, one would be to provide the CRA information needed by the Parliamentary Budget Office to complete a tax gap estimate. Second, increase the capacity of the Canada Revenue Agency to go after tax cheats. Third, make amendments to the general anti-avoidance rule to include a clear statement that economic substance is required in any transactions to be considered. And fourth, we need to, Canada needs to support substantive reforms of the international corporate tax rules that are being developed through the OECD base erosion and profit shifting process. I'd be happy to answer questions about that if you like.
Okay, thank you very much for your presentation. We'll go to Mr. Hayes now, please.
Thank you, Chair, for the opportunity today to appear before you and your colleagues to address important issues that relate to the venture capital ecosystem in Canada. In its March 2013 budget, the federal government announced a surprise phase-out of the long-standing 15% federal tax credit for Canadian investors who have chosen to support budding entrepreneurs across Canada who want to start and grow their businesses. This federal tax credit has resulted in the levering of billions of private dollars of risk capital from over millions of Canadians being available to our early-stage companies since the early 1980s. In fact, since the program was created by the Mulroney government, well over one-third of all venture capital available in Canada has come from Labour-sponsored venture capital funds in British Columbia, Saskatchewan, Manitoba, Ontario, Quebec, New Brunswick, Prince Edward Island, Nova Scotia, and Newfoundland and Labrador. Now, despite the best efforts of many individuals across the country to convince the federal government to reverse its decision to phase out the federal tax credit, the industry is now faced with the reality of moving forward and dealing with a number of challenges that result from the withdrawal of the tax credit. The biggest of these challenges is fund liquidity and the impact that issue may cause for existing shareholders in our funds and for the portfolio companies in which our funds have already made investments. The Department of Finance has indicated there will be changes made to some of the rules governing federal investment pacing obligations for labor funds which want to exit the program, which at first glance appear to be helpful during the transition process. However, these same funds have provincial pacing obligations which are not forgiven on the same basis as the proposed federal changes, so funds are still obligated to invest their shrinking capital base, which further exacerbates the liquidity issue. It would be helpful if the Federal Department of Finance would work collectively on this matter with its provincial counterparts. We also know the federal government is changing its approach to ensuring an adequate supply of venture capital is available to Canadian entrepreneurs and companies by directly investing $400 million of new capital into the industry. Many of us in the industry have been supportive of this initiative, now known as the VCAP program, and it's my understanding that further positive announcements will be made by early fall about additional private sector funds which will be chosen to participate in the VCAP program. While these announcements will be welcomed by the industry, a word of caution is in order. The choice of additional funds who will qualify for federal VCAP funding is only the first step in creating new pools of capital for Canadian entrepreneurs. These chosen funds then have the significant challenge of seeking matching private funding before they are in a position to actually write checks to Canadian entrepreneurs seeking risk capital. How long this process of raising private capital will take and how successful these funds will be in this endeavor is anyone's guess. On that basis alone, I would ask the federal government to reconsider an extension of a year or two for the existing federal 15% tax credit to ensure there is a continued adequate supply of VC while the VCAP program gets up and running. In closing, the particular fund I manage operates in Atlantic Canada, and I want to say a word about the Atlantic Canada Opportunities Agency and the positive impact it's making in our region and the startup community. We like to say if you think it's difficult for an entrepreneur to raise venture capital in central Canada, come on out east and see how challenging it is in our region. ACOA has become a very important source of non-dilutive capital for many, many local companies and an excellent partner for those of us in the private sector who are also investing in these companies. We appreciate their good work, and I just wanted to make sure the committee was aware of this fact. Thank you for your time, and I'm happy to answer questions later in the session.
Thank you very much for your presentation. We will now go to Professor Teds in Victoria, please.
Yes, thank you. Good afternoon. I assume you can hear me?
Yes, we can, yes.
Okay, my name is Dr. Lindsay Teds. I'm Associate Professor of Economics in the School of Public Administration at the University of Victoria. My primary area of expertise is Canadian tax policy with particular focus on design and implementation. And with that, I would like to thank the committee for allowing me the opportunity to share my views on two tax policy measures that are contained within Bill C-31. And this is namely the elimination of the need for individuals to apply for the GST-HST tax credit and allowing the Minister of National Revenue to automatically determine if an individual is eligible. And I'd also like to talk about the yet another one-year extension of the mineral exploration tax credit for flow-through shares investors. With respect to the GST-HST credit, one of the biggest challenges levied against the tax itself is that it is regressive. However, there are features of the implementation of this tax that offset its regressivity, and a very important part of that is the GST tax credit. This tax credit puts money in the hands of low and middle income households to offset the tax that they are paying on their consumption. Without the passage of Bill C-31, the status quo for applying for this important tax credit will remain, and that is very unfortunate. The current administration of this tax credit requires individuals to apply for it every single year by checking a box on their tax application. By using this opt-in method, low-income individuals who overlook the box or, more importantly, do not understand the box and do not check it miss out on this very important tax credit. Bill C-31, through it, the federal government is making a very significant and very important reform to the administration of the GST-HST tax credit by eliminating the need of individuals to apply for the credit and allowing CRA to automatically determine if an individual is eligible for the credit, as we do with most credits in the tax system. And I applaud this move away from an opt-in method towards an assessed method, because the credit is an important way to get money in the hands of low and middle income Canadians, and this simple change will actually increase the money going to these households. With respect to the mineral exploration tax credit, in form and function, this tax credit dates back to 2000 when it was called the Investment Tax Credit for Exploration. Now, the impetus for this 15% non-refundable investment tax credit for investors in flow-through shares in mineral exploration companies was the low prices of metals that occurred in the 1990s. And those low prices caused a significant contraction in mineral exploration. Now, metal prices have rebounded significantly since the 2000s, and that tax credit, which originally was set to expire in 2003, has unfortunately been continuously renewed since that time. The METC was last set to expire on March 31st, 2014, but this Bill C-31 extends it for yet another year, and this is despite the fact that mineral price taxes are at historically high levels and in fact have increased threefold since the tax credit was implemented. So not only have the conditions that prompted the creation of the tax credit disappeared, there is actually no evidence to support the existence of the tax credit. There is no evidence that the credit induces increased exploration activity over that stimulated by commodity prices. On the investor side, the credit subsidizes high-risk investments that are predominantly used for tax planning purposes by high-income taxpayers rather than for calculated investment purposes. The dire consequence of it is that the tax credit channels investment money away from other more lucrative but unsubsidized investments. In fact, the rate of return of investments that qualify for this tax credit is very poor, suggesting that the tax regime is the sole purpose for these investments. On the administrative side, the METC regime is associated with high administrative and compliance costs, benefiting only tax lawyers and accountants. It is time to end this tax credit that benefits wealthy investors and subsidizes poor-performing investments. Doing so will help restore fairness to our tax system and close a loophole with little discernible benefits for the taxpayers that fund it. In closing, I'd like to thank you for providing me with an opportunity to provide you with my views on these two measures, and I look forward to your questions. Thank you.
Okay, thank you very much for your presentation. We'll begin, members. On va commencer avec Mr. Caron.
We'll begin with Mr. Caron, 7 minutes. Thank you very much, and thank you to our witnesses for their excellent presentations. I'll begin with Ms. Tedds.
Problematic. So, I'm looking at your presentation, which was actually well researched, or seemed to be well researched. We're talking about you talked about two issues, which is the GST credit and also about the flow-through shares. Both of them are actually tax expenditures in their own way. They are a way for basically government to provide some benefits to groups or to individuals that decreases its revenues, right?
Correct.
And I know that you've done lots of work, actually, not only on this presentation, but in the past on the issue of tax expenditures. And I'd like for you to actually explain to us what's the difference between the type of tax expenditures we have with the GST, HST tax credit and with the flow-through shares, for example, or any other tax credit per se. There are some tax credits, I understand, that you are in favor of, and others that you are not in this case, right?
Mm-hmm. Well, it really boils down to the rationale for the tax credit. The benefit of the GST tax credit is predominantly to overcome the regressivity of a tax measure that we have implemented. So consumption taxes are known to be highly regressive. That is, they affect low-income households on a greater proportion of their income than high-income households. As a way to overcome this regressivity, we are, through the tax credit, are basically crediting these individuals for the tax that they are paying. So we're putting the money back into their hands of low and middle-income households to help overcome the regressive nature. And this helps address issues related to particularly poverty. Okay, so you're benefiting low and middle-income households. With respect to boutique tax credits like the METC, they are very targeted to high-income individuals who do not need income support in order to increase their well-being. So with the MECT particularly, we're looking at a tax credit that solely is there to subsidize an investment that would not take place without that tax credit. And it's very questionable whether there are any discernible benefits to taxpayers from that particular tax credit. And that's true for tax credits such as the child fitness tax credit and other boutique tax credits. The benefits accrue in the hands of high-income individuals at the expense of low-income individuals.
Yeah, I'd like to go on this because I actually have column or an op-ed that you actually wrote on the issue of the fairness in Canada's tax system. And you actually referred to this, and I'll quote you. You said some of these tax expenditures may be popular with taxpayers, but their popularity is misplaced. For example, research has found that the child fitness tax credit and the public transit amount directed $107 million, 70% of the value of these tax credits, in tax relief to the top 25% of tax filers. Because these tax credits are non-refundable, not all households that claim them actually derive any benefit at all, demonstrating the complexity these credits add to our tax system. We had Madame Presso from the CGA, who actually came and talked to us about the complexity of the tax system. Could you tell us what would be a good guideline to decide if a tax credit is actually appropriate and useful, and which one would be, let's say, less efficient?
Oh, I'm sorry. As an economist, efficiency is a a dangerous word. So what exactly do you mean by efficient?
Well, that it would not, for example, be more efficient to provide some kind of direct subsidy if we wanted to reach some direct goal of public policy, for example. Well, I'll just tell you what I'm aiming at right now, is that we have tax expenditures which are usually invisible, and many of them are aimed at some kind of public policy, which you could actually achieve by making the action more visible, like having a subsidy or having it on the books and the budgets, for example. So on what should be the guideline deciding what should be a tax credit and what should be a direct expenditure?
Well, I mean, one of the most important things to consider is whether or not what you're doing is going to produce any incremental benefit. So when you look at, let's take the child tax fitness credit, the goal of that was to increase the number of kids in athletic sports. What we do know from the evidence is that it actually has had no discernible impact on the number of kids participating in sports. It is instead subsidizing parents who are already putting their kids in sports. So if the vehicle itself doesn't deliver on what is a very admirable policy goal, then it isn't the appropriate tool to use to achieve that goal. And in that case, subsidies towards low-income households, or at least towards supporting a reduction in fees of low-income households to participate in sport, would have a bigger incremental effect, because it induces those households to enroll their kids in that sport because they get the benefit right away. They don't have to wait a year or to a year and a half after they have enrolled their child to get the money back from that expenditure. So I wouldn't say that there's a carte blanche rule. It's this matter of what are you trying to achieve? Will the tool achieve that? And in most cases, when you're looking at incremental benefits, if you're trying to get more people doing something, a tax credit isn't the way to go.
Thank you very much. 30 seconds. I'll go to Mr. Hayes very quickly. You know about the elimination of the tax credit on labor-sponsored venture funds that was voted and adopted last year. How is the industry right now, the capital venture industry, adjusting to these changes?
Well, the retail industry, the labor fund industry is very concerned about the impact this will have on liquidity in the next few years. It has sent a message that 50% of the tax credit is going to be eliminated for investors. So it's created great doubt by those of us in the industry, as well as the investment advisors who support the industry by recommending the asset class to their investors. And of course, it's caused great concern for the portfolio companies who are relying on our funds for follow-on investments, and entrepreneurs who are looking for new investment in their companies.
Okay, thank you. Merci. We'll go to Mr. Keddy for your round, please.
Thank you, Mr. Chairman. Welcome to our witnesses. Mr. Hayes, you spoke briefly about Economic Action Plan 2012 and the government's commitment of $400 million to help increase private sector investments in early stage risk capital. And then under the Venture Capital Action Plan, which you also mentioned in 2013, we put a more comprehensive plan to reinvigorate the venture capital sector and seeking private capital matching funds. But do you want to just expand a bit on the difficulty of finding those private sector matching funds? Because you mentioned it, but you didn't go into any detail.
Well, it's if you look at the last 10 years in Canada, there's been a dearth of venture capital generally, and the challenge has been trying to get institutional, pension funds, endowment funds, corporations to invest in the asset class. So the federal government, has attempted to create, to motivate these groups to match their funding. They're putting their money in and hoping to attract private sector money to match those funds. And in concept, this is great, and we support that. I think the issue is going to be how long is it going to take? Are those players ready to play ball and match the federal government's efforts in this area? And the concern we have is by eliminating the federal tax credit for the retail investors, there could be a significant gap between those new funds are up and running. And we just don't know how long it's going to be before these new pools of capital will be available for entrepreneurs to access. I mean, on paper it sounds great, and I hope it's very successful, but we think that it's going to be months and maybe a year before these new funds have the ability to cut checks.
Yeah. And the provision in 2013, 2014 of an additional $100 million in the incubator fund, I think should help to alleviate some of that. But
to some extent, BDC has been quite active, and we're again supportive of their efforts. There's no question. But when you look at collectively the amount of capital that the labor funds have been investing across the country, and in particular in Quebec, that could cause a significant gap in terms of accessibility and availability for entrepreneurs.
Thank you, and maybe just in closing, in recognition of your comments on Atlantic Canada Opportunities Agency, just to blow our own horn for a second, I think the government has done a better job with that, and actually it is now the model for regional economic development across Canada.
They've become an important player for early-stage entrepreneurs, seed investments, and we're very pleased in the last few years how they've really stepped up in terms of their support for the startup community. I would agree.
Excellent. Thank you. Ms. Freilich. That's a good, strong, South Shore name, Mr. Chairman, so there's no question on how you pronounce it. You
challenging the chair?
Absolutely. But I've heard it called other things. On the tobacco taxation, you I think were covered all of it. The real issue here was the general domestic rate of excise duty on cigarettes hadn't effectively changed since 2002. It didn't meet inflation. I think it's 23.2% is actually what it had to go up. I agree 100% with your assessment that this will have will be a deterrent on cigarette smoking, on tobacco use, period, and will pay for itself in health care benefits. I don't think there's any question on that. At the same time, this really isn't part of the budget, but there's been a lot of discussion lately, and I'm sure you've heard it amongst First Nations on selling tobacco on reserve to non-reserve members and charge tax on that tobacco. Has your group even looked at that, even in a cursory way, and given some thought to the fact that people are going to continue to smoke, unfortunately, in this country? It may help in many ways to eliminate that underground stream and underground pipeline of tobacco. And have you given any thought to that?
Can you just clarify what specifically you're asking if we have looked at trying to deter non-Aboriginal from going on reserve to purchase, or the sales to them?
Non-Aboriginals are not supposed to be able to buy excise tax duty-free tobacco on reserve. Of course they do. We're well aware of that. There's a huge underground economy in tobacco. The discussion of late has been amongst First Nations chiefs in actually selling legitimate tobacco on reserve, charging tax on that to non-natives. And given the fact that people are going to smoke, have you even looked at that as a way to get rid of the non-compliant underground economy on tobacco?
Right. So I'm not familiar with any work going on in that particular area. If I might, with the permission of this committee, turn to my global expert, Mr. Cunningham, and just make sure that I've got that right. You can,
quite a discussion on it.
May he just sit for a second and address? Yeah, I think it's helpful. This is the expert globally. So.
There's been a very good example in the province of Manitoba where First Nations governments, with agreements and with the province, have prices equal to an amount that includes provincial tobacco tax. So the full amount is included. The First Nations gets the revenue. There's no tax leakage. There's no abuse by non-natives of the First Nations credit.
Okay.
Okay, you've got 30 seconds.
One example. Thank you, Steve.
Yeah, I think I have just a quick comment to Mr. Howlett. You raise a number of points on the nature of the underground economy and the difficulty of not really underground, of catching tax cheats. Part of the problem is that, like, when it comes to you know, people who are sheltering money offshore and have millions of dollars to shelter find expensive ways and to be non-compliant. It's difficult to find. It's difficult to assess, and to a degree, in your comment, it sounded like maybe it was easier than it is to do.
Yeah. We're going to have to leave.
I apologize. That I know.
I think quick means something different on the South Shore. It means so we'll have to come back to that, Mr. Howlett. Unfortunately, Mr. Keddy's out of time. Monsieur Dubois, s'il vous plaît, pour 7 minutes.
Okay, thank you, Chair. I'm going to speak slowly because I'm going to ask my question in French. But d'abord, commençons par vous remercier.
I wish to first begin by thanking you because your presentations were all very interesting, and also to Ms. Ted in Victoria, very interesting. My first question is for Mr. Hayes. Mr. Hayes, you know that in the 2013 budget, the government announced the progressive elimination of the tax credit for venture capital, the labor-funded venture capital tax credit. That's very important in Quebec as well because it is said that more than 80% of this type of activity is found in the province of Quebec. You have the other provinces as well, of course. But can you tell us what the impact will be on the economy, what the impact of these measures will have on the economy? This will be a challenge for investors.
In particular, as you pointed out, in the province of Quebec, there are two major funds, Solidarity and Fund Action, who have played a very significant role in providing financing across all sectors of the economy, and in particular, I guess to some extent, the technology sector. So this could have a pretty dramatic impact in terms of their future investing. In the rest of Canada, there are only about 8 funds that are left in this asset class, and I think already we've seen evidence that some of these funds are having liquidity issues or will have liquidity issues, and this is why it's important in a transition to provide rules that negate the negative impacts for shareholders and portfolio companies. We're quite concerned that the VCAP program, while great in principle, is taking longer to get up and running, as I said earlier, and to actually create these pools of capital for Canadian entrepreneurs. So this is why we would ask the government to reconsider its decision. We accept the decision, but we would prefer to have a longer runway in terms of the phase out of the tax credit to give us more time nurture the companies and get to liquidity events, which will negate the impact of this reduction of the tax credit.
Yes. Thank you very much, Mr. Hayes. And ma prochaine question.
My next question will be addressed to Mr. Hollett. You told us about the electronic transfer of funds in your presentation, and you mentioned the aspect that deals with the new measures surrounding informants. But I thought I understood that you agreed with the measure, but at the same time there were other interveners who have spoken to us on it and who have said that it really wasn't very clear. There were not enough provisions, and to leave all of this type of change, this adjustment in the hands of the CRA could result in some major impacts, given that the measure is not detailed and clear. What would you say to that?
Our tax informant program. The provisions for the protection of informants is not clear enough.
Right.
And I know from personal experience, having talked to several people who have information they wanted to come forward with, but as you know, some of the tax cheats using tax havens are connected to criminal organizations.
Exactly.
So these people have very real fear for their life, and I've talked to them, and yet they feel they should do the morally correct thing and come forward with this information. But I don't think there is sufficient protection. As the previous witness mentioned, there may be provisions if it's a criminal case that would apply, but in a civil case, they're not there. So there are some significant improvements that are still needed. What's also not clear is what the staffing capacity is going to be to implement this program. In the United States, they have 40 staff in the whistleblower office.
Okay, right.
And we know Canada is a smaller country, so we don't maybe need that many people. But I've heard that government was thinking of only having 1 or 2 staff, and I don't know that that would be adequate to roll this program out in a good way.
Une minute, donc voilà.
Oh, I have only 1 minute left. I can't add much in a minute, but you would agree that these measures are an indication that the government is trying to challenge tax evasion, but we don't know what type of major change that will result in, because each taxpayer should pay his fair share, but are we going to reach that with these measures?
Important steps forward, but they aren't adequate to the size of the problem that we're facing. So I welcome them, but I'm hoping that the government will consider further steps because this is a big challenge. And it's as I agree with Mr. Keddy, that there is it's a difficult problem to crack. And so I do have some sympathy for the Canada Revenue Agency in trying to deal with this problem. But they need some further help to be able to do it.
Thank you very much.
Thank you. Merci. We'll go to Mr. Adler, please.
Thank you, Chair. Thank you, all the witnesses, for being here today. I do want to, initially I wanted to go to you, Mr. Hayes, to talk about LSVCs, but I won't have the time. So, but I would like to pursue that with you at some point. But I do want to ask Ms. Freilich, taxing consumption taxes on cigarettes. I mean, all of us who've studied economics know the Ramsey rule that you apply consumption taxes to goods of inelastic demand in the hope that it will minimize all the welfare costs associated with it. Are we at a point now where it doesn't matter sort of how much added tax we place on cigarettes, that the people are still gonna buy them at the same level as they were before, or reached that point yet?
We don't believe so.
Okay.
Thus, the recommendation this time round that it was well beyond time to increase the federal taxes. You'll have noticed that several provinces also view that they still have room to put more taxes on. Ontario is talking about that today. The BC government increased their tobacco tax a couple of weeks ago. So there is room, and it's not just about a revenue grab, I don't think. I know it's
Is consumption going down, though, as the taxes?
Consumption is going down. And depending on the study that you look at, we'll say there are 20% who are smoking in this country, but it's down as low as 16% in some populations.
Okay.
The population we are concerned the most about, and because your question, I think, speaks to addiction.
Yeah.
And those who are very deeply addicted, we know that addiction to nicotine is a very strong one, they will certainly pay a great deal to get the product to which they're addicted. We believe there's still room to move. For the Canadian Cancer Society, one of the biggest areas of focus is young people. I said in my comments, no new smokers.
Yeah.
And this is why, with young people, the price point is especially important. Those who are addicted, they're adult, they have been smoking for years. We do everything we can to help them stop smoking if they're going to. And part of that is the pricing issue. But you're right, they will continue to find the money to fuel that addiction. For young people, we don't want them to start.
And how's that battle going with young people?
It's been going very well. I don't have the specific numbers. Mr. Cunningham probably does and could quote the statistics. I believe it's around 16, 17% and dropping year over year.
Okay.
The challenge we focus, and it's not a budgetary issue, but it is around flavored tobacco. And that is something that should be banned. We can talk about that today or another time. But that is something that is an introductory process for young people. It is a significant concern for us. And e-cigarettes are another issue. We don't have as much evidence, but there's a lot of research going on in that area as well. But certainly,
sorry, what's an e-cigarette?
E-cigarettes, it's a relatively new delivery mechanism for nicotine in the States.
Okay.
They've not been regulated in Canada to be used with nicotine, but it is a cigarette-like device that vaporizes, you inhale, you feel like you're smoking. And there are flavors that can be delivered through this mechanism. It's being positioned both as a harm reduction approach, similar to Nicorette patches have been in other approaches, but it's also an introduction to cigarettes and the way tobacco can be delivered. So, again, the evidence is less clear on that front, and I know it's not a budgetary issue, but certainly the flavored tobacco is very, very clear for us, and we urge the government to take a look at that.
Yeah, okay. So there's still even room, then, you would say, to increase taxes on cigarettes even more?
We believe, yes. The increase that this current budget would place on tobacco, and you heard me refer to it as an inflationary adjustment.
Yes.
Because when you look at not only the costs that have gone up, and the cost of tobacco has stayed stagnant federal tax-wise for about 12 years now. And I mentioned the discounting issue, that in response, the tobacco industry has offered discount brands. The tobacco is basically the same, but the pricing is much, much lower. And, so the real price of tobacco has done nothing but gone down over the last decade to 15 years.
Okay, thank you. How much time do I have?
You have about 2 minutes.
2 minutes, okay. All right. Ms. Ted's another time. Mr. Hallett, what are your, you come here as a tax expert. What are your credentials for claiming you're a tax expert? We had before a couple of lawyers from who've studied, tax law. They're tax lawyers. They're well educated in the field. What expertise do you have?
I have worked in the past for the Ontario Fair Tax Commission.
Okay. What educational experience do you have?
I have a master's degree in adult education.
Okay.
So my specialization is more in the area.
So it's not really in taxation at all.
No. But I do have some background in tax and work around taxes.
Okay. Well, see, I guess you pay your tax. That's what makes you an expert in tax. Now, Canadians for Fair Taxation, is how are they funded?
We have individual donors and organizational donors.
You have trade union donors?
Yes, trade unions, non-governmental organizations, churches.
Right.
Quite a wide range of groups support us.
Okay. And I'm not trying to. I'm just saying, I'm not a tax expert either, and my expertise comes from paying taxes too. So I'm not trying to, denigrate anything that you're saying. I just wanted to be clear here that you kind of give the impression that you're a tax specialist expert, but you're not really, are you?
Well, I have learned a lot about taxes over the years, and you don't learn just in school. In fact, sometimes experiential learning.
So, for example, when you talked about the tax gap.
Yeah.
No one's been able to, in the OECD, we had a representative right here at this finance committee just recently who said it's absolutely impossible to calculate, yet you were somehow able to calculate it. How were you arriving at that?
Well, the OECD does actually recommend to their members that a tax gap estimate can be a very useful tool. If you look at the literature from the OECD, it may be difficult to pinpoint the exact amount, but the point of doing it is not to embarrass the government. It's to help the government identify the areas where their efforts should be focused. So it is a tool that can be helpful to improve the government's performance and know where to put the resources to most effectively.
Okay, thank you.
Yeah.
All right, we'll end on that agreement then. Thank you. Thank you. We'll move to Mr. Rankin. 7 minutes, please.
Thank you, Chair, and thank you all the witnesses. I'd like to continue with Mr. Howlett of the Canadians for Tax Fairness, and I want to also sort of drill down on some of the work that Mr. Dubourg initially started. Particularly on the resourcing issue. I've got your brief before us, and I understand that the Conservatives have cut the CRA budget by $250 million, and 2,500 people are no longer there, full-time equivalents. I'd like you to comment, if you would, on what your organization has concluded in terms of the resourcing available to deal with the tax haven problem.
Well, this committee is probably aware that just this week, the Auditor General released a report on aggressive tax planning, which did find there are some problems with Canada Revenue Agency's capacity to go after tax cheats. And just this week, I met a senior CRA staff person who confirms that there continues to be a serious lack of staff capacity in the International Audit Division to combat tax haven-related tax evasion. And most importantly, he warned that this situation is likely to be compounded by a large number of auditors who will be retiring in the next few years. And unless staffing levels are boosted and good training programs put in place, which was one of the areas of the Auditor General's report of particular concern, the situation could get much worse than it is now. And it's a false economy to try to save money by cutting staff in this area when we will lose much more in uncollected revenue as a result.
So in the budget that was tabled in February, they say the measures regarding tax avoidance will allow the government to recuperate $44 million in 2014-2015. And I guess you've indicated in your brief that the size of the problem I think is indicated as $5 to $8 billion or something in that range that could be collected. So obviously there's a great disparity between that figure and the $44 million the government seems to believe it's going to collect through these measures.
Well, I do think that the offshore tax informant program is a worthwhile measure, and that's probably the one that is most significant in terms of potential new revenue. But if you look at the U.S. experience, which I think is quite relevant here, they have, with much longer history and much more staff resources available, they collected only $367 million last year. So 10% of that is certainly less than $40 million. Right. And that, they found, it takes 5 to 7 years before cases can be completed. So that is, the actual $40 million, it will not be realized. It's probably optimistic, and it won't be realized for another 4 or 5 years down the road at least. So it is worthwhile, but probably it won't amount to that large a figure.
And in your report, you refer to the fact that there's a 10% increase, you point out, or at least Statistics Canada points out, in direct foreign investment abroad, and that the increase in tax havens is by $15 billion to a total of something like $170 billion. I got those figures correct?
That's correct. So the point here is that it's a growing problem. Despite some initial efforts by the G8, by the OECD, to begin to address this issue, we're a long way from getting a handle on it.
And in your report, you mentioned the OECD just now. You mentioned that the G8 Tax Haven Action Plan is referred to, and endorsing the OECD's base erosion and profit sharing process to reform international corporate rules. Yet you comment about Canada's not taking a very active role. Could you speak to that? You're part of the Tax Justice Network, right?
Yes, I did consult my colleagues in Europe, part of the Tax Justice Network, who are monitoring the OECD process very closely, and they reported that Canada is not taking a very active role, which I suppose may be a good thing. At least there are no reports of Canada actively resisting it, but I would urge the government to step up and make a stronger effort to actually push through significant reforms, especially to the international corporate taxation rules.
What other countries measure the tax gap? You've talked about that in your conversation with Mr. Adler. Is this something
roughly half the OECD countries do tax gap measures.
Okay.
And there was a very good report the OECD put out a couple of years ago assessing the different efforts. And the Canadian Parliamentary Budget Office did make use of the best case efforts looking at other countries and have done some work on a tax gap report, but couldn't complete their study because of certain CRA information they would still need. So it wouldn't take much for the government to actually provide that information. We could have a report that could be very helpful in helping CRA to know where to focus their efforts.
And speaking of lack of information, it was in the Auditor General's report last week that the Finance Department is failing to provide information on dealing with aggressive tax planning. That was reported by the Auditor General. Another example of the government not providing information to independent watchdogs.
Yes, there are further legislative changes that I think are warranted, particularly improving the GAR
And that was the last thing I wanted you to talk about. You talk about GAR. I've only got 1 minute. Could you explain what GAR is and what your proposal is regarding economic substance?
GAR is a general anti-avoidance rule, and it relates to corporate profit shifting and other tax evasion schemes. And government's ability to go after corporate profit shifting and aggressive tax avoidance schemes would be significantly strengthened if the Income Tax Act were amended to require the courts to consider economic substance in determining whether there is an avoidance transaction or whether an avoidance transaction results in misuse or abuse. So just a tightening up of that regulation would make a big difference in the government's ability to get convictions in tax court against corporations who are profit shifting and tax evading.
Thank you. Thank you. Thank you, Mr. Rankin. Mr. Allen, please.
Thank you very much, Mr. Chair, and thank you to our witnesses for being here. I'd like to start with Ms. Freilich and Mr. Cunningham, if I might, with respect to the tobacco taxes. And I look at New Brunswick is $44.52, and what I'd like to understand is one thing: what is the key to West, which is higher, those higher taxes? And you indicated that they've had more success. What has been their key for decreasing in contraband? What do you think of the major things that they've done, as opposed to the lower tax jurisdiction, if you will?
In Western Canada, there's no legal factories, there's no smoke shacks, stores selling untaxed product to non-natives, and the governments there have just never allowed them to start. Whereas in Ontario and Quebec, there's a longer tradition of them occurring, so it's harder to then deal with it. but in the West, they've never started.
Okay. What is the healthcare cost of the introduction of one young smoker to smoking?
What we can say is that it's $4.4 billion a year in direct healthcare costs because of smoking. So we have to do some calculations to get a very specific answer, but it is enormous.
So $4.4 billion a year just in cost to the Canadian economy from healthcare costs?
Just from healthcare costs. If you included other costs, fires, lost productivity, it's much higher.
Okay. Thank you very much. Mr. Hayes, I'd like to talk to you a little bit about the venture capital. And you indicated about the venture capital fund being in place since Mulrooney. Can you talk to me about the trends? And what I'd like to understand is, over the past couple of decades, if you will, can you comment about the number of deals that have actually been closed using these funds? And is that trending up? Is it trending down? Or just exactly what's happening with these deals up until last year?
Right. Well, I can speak to the various funds that our organization runs, and we've probably closed in excess of 1,000 deals since the funds that we manage have been created.
That would, excuse me, but that's since when?
Well, we created our first fund, and this is just our organization,
I understand. That's a good,
in 1992 in British Columbia.
Okay.
And then acquired the management of one of the original funds, the Working Ventures Fund, which was in Saskatchewan, Ontario, and out east. They would have done in excess of 1,000 deals as well. And then we created a fund in 2005 in Atlantic Canada. It's a small fund. We've done 20-odd deals. In the province of Quebec, my gosh, I'd hate to, I couldn't estimate that would be thousands of companies that would have received support through those funds. Those are quite large. The Solidarity Fund in itself is, I think, around a $10 billion fund, so you can imagine the breadth of the scope of their activities. And in the heyday, when these funds were first created, I think folks were focused on the tax credit, which was probably the wrong focus to some extent, and some of these funds weren't managed properly and so on. But they made a significant contribution. As I say, when you look at the stats, over a third of all the venture capital in Canada since 1984 was supplied by the various labor funds that were established across the country and in operation. That's become less of a factor in more recent years, but the participation by institutions in VC across Canada has dropped significantly as well. So probably as a percentage, the labor funds were still a pretty important part of the VC ecosystem.
So using your company as a metric, so just so you're more familiar with the numbers in yours, has that trend of those thousands of deals since 1992, which were, have you seen that trend go up, down, or has it been? I know you said the percentage is steady, but how? Well,
significantly reduced, given the challenges in fundraising, and this measure has sent a pretty negative message to the investment advisor community. We don't sell directly to clients. We work through the brokerage firms, financial planners, IROC firms, which would be the bank-owned brokerages. So we've seen fundraising go down significantly in the last couple of years.
Okay.
Yeah.
Is it possible to provide a chart to the committee with respect to the number of deals? That would be very helpful to see.
We have that info. I don't have it with me,
that'd
but
be fine.
Certainly can. Yeah, there was some very good work done by an economist based in Montreal, Gilles Duraflay, who's probably the most knowledgeable independent individual in the country who's examined the impact that these funds have made across the country. And that submission was made, I think, back in July of 2013, and has all of that information. And I'll make sure that the committee gets, we'll provide that information. He's very well regarded in the industry, not just in Canada, but internationally. And I think that work will stand the test of anyone's assessment.
Okay. From the ACOA perspective, just want to ask you a couple of questions on ACOA.
Sure.
Has most of that funding come through the Business Development Program loan area for the businesses that you're talking about?
It does, but I think in more recent years they've purposely attempted to focus more on the early stage side of things where it's really needed.
Yep.
And we think they're just doing some great work in the provincial offices there and really trying to help address the need at that level.
How have you seen in one thing to have this kind of thing, but I see that a lot of the provinces now are coming on, like New Brunswick has a pretty generous small business investor tax credit. So, yeah, this will be my last question this year. Small business investor tax credit. How do you see those types of things as being good possibilities for people to raise capital? Because I know New Brunswick is actually looking at theirs now and actually potentially enhancing it.
Yes, they are. We've done a lot of work with not only the Crown agencies like NBIF, but the investor tax credit has been utilized in all provinces to try to get angels more active in this sector. They're all important parts of the ecosystem. Not anyone has the entire solution. You need, the family money, you need the angel money, you need the early stage investors, and you need the Series A and Series B investors. So it's a range of solutions to a pretty significant challenge for entrepreneurs.
Okay, thank you. Thank you, Chair.
Thank you, Mr. Allen. We'll go to Mr. Cullen, please.
Thank you to our guests, and I'll endeavor to treat you like guests. And Mr. Hayes. How would you describe, I apologize for missing your earlier presentation, just the general trending right now in venture capital markets in Canada, particularly in comparison to the United States? We're trending up? We're trending down?
No, it's about the same. I mean, we on a per capita basis, we're at about 40% of what is happening in the U.S., and that affects the portfolio companies because they have to compete against U.S.-funded companies.
So I'm just, and again, I apologize for missing, you may have commented, but the phasing out of the labor-sponsored venture capital, this is going to improve the situation or hurt the situation?
Not at all. And
how important is venture capital in the stimulating, particularly of new entrepreneurial, innovative businesses in any market, particularly Canada?
It's critical, particularly in the knowledge-based industries, because there are no assets other than the knowledge and the entrepreneurs. None of these deals are bankable.
So often
it's critical. And if you look at Quebec, for example, if you look at the aerospace industry or biotech, a lot of that was funded.
This is the very lifeblood of the industry.
Yeah,
these innovative, knowledge-based.
Absolutely.
So we've often lamented productivity and competitiveness, particularly versus that of the United States. Here in Canada, we lament this, and the solution seems to consistently, coming from the current government, be, well, it's about tax regime. It's simply the effective tax rate that companies are paying, and if we're more competitive there, then we will have a more productive, more competitive, and more innovative economy.
Right.
Does the aspect of what we're just talked about, the ability of venture capital money to enter the market, also bear some effect on our ability to be effective, innovative, and competitive?
Well, it goes without saying. I mean, that's where...
I think it needs saying sometimes, maybe, I guess is what I'm just, let me express it more plainly. I'm confused. With a government, my conservative colleagues can help me out. Jobs, growth. What's the third one? Long-term prosperity. Thank you. Those are the hallmarks of the. I know I've heard it so many times. You think I would have this, but if it is trademark, I will pay the trademark later. Thank you. With that being the fixation, the alleged fixation of the government, and venture capital playing such a key role in jobs, growth, and long-term prosperity, I'm confused. Why phase out a program like this?
Well, we've attempted to explain to the federal government the importance of this program. No program is perfect, and certainly we all agree, those of us who are practitioners, that there are ways of improving the program, but to cancel it, we think was a regressive step. Now, that doesn't, I've also said in my presentation that we're pleased with the introduction of the VCAP program, but it's going to take a significant period of time to get that up and running.
And whether it's of scale and effectiveness.
And whether it will achieve the goals that were initially set and the targets that were initially set, it's anyone's guess at this point.
Call it the F-35 venture capital program, and we'll get some money behind this thing. Ms. Tedds, sorry to include you again. You made some comments just around effectiveness of various tax credits in helping and aiding the economy and Canadian taxpayer in general. Any comments? There's been some debate around income splitting, but not growth yet. We didn't see it here. Any particular comments in your research that you've done over the effectiveness of this? If you haven't, you can say that as well, of course. I believe our witness in Victoria.
Benefits high income. The income splitting predominantly benefits high income households. Very little benefits accrue to low and middle income households. So it depends on what you're trying to achieve with the policy, but the academic research on income splitting has been clear there are better ways of addressing the inequities in the tax system that proposal is trying to address.
Thank you. To you, Mr. Howlett, you quoted, we're talking about the ability to go after tax evasion, tax avoidance. A government, any government, would be interested in this. Often the claims of what you can get through a tax evasion scheme are overinflated, but you certainly can't get those if you don't have the people going after those that are avoiding or evading taxes. Can you quote back from the Auditor General again what particular problems? I want to understand these. For a government that makes claim in the budget, in its attempt to balance the budget, how much money it's going to be able to recoup from those that have offshored money or avoided taxation, but then go through and cut $250 million off the very agency that's meant to go out and do that. I'm trying to connect those two dots and make some sense of what the government's claiming.
Well, with regard to the Auditor General's report, he identified a number of problems, but the two that I would underline are, one, problems with the training of auditors. It's very difficult to go after tax cheats using tax havens, and companies kind of pushing the envelope on profit shifting and so on. Some of that is allowed, but a lot of companies are going over the line and exceeding what is really allowed by law. So the training of auditors is critical because quarter of the CRA kind of top-level auditors are due to retire in the next 5 years. So they're already understaffed. Seriously, they were hit with more staff cuts than any other government department. And even though the International Audit Program was spared the full brunt of the tax cut, they still had reductions from previous years in the staff working in that area. So that situation is going to get worse if we don't address the training needed. And the other thing is the Finance Canada's lack of sharing on information on what exactly they're doing on legislative measures to improve the capacity. It really is important that the government give the tools necessary to the CRA auditors to do their jobs. And one of the problems is that we still have too many loopholes and holes in our tax law that allow all kinds of ways for tax evaders to shift profits, avoid paying taxes.
This is the Auditor General that's raising this.
And those laws continue to be needed to be tightened up. Now, there are a few small steps in this implementation bill, which I applaud, but there's much more that needs to be done.
And thank you, Chair. I'll wrap with this, but I think in that holistic approach, if the Auditor General comes in and says these are the holes within the auditing and Canada Revenue Agency system to go after what the government claims it wants to go after, I'm sure all of my Conservative colleagues would take the Auditor General's advice as being qualified and being capable to assess this particular system. The fact that Finance Canada withheld documents from that same Auditor General in the pursuit of this knowledge should raise alarms for all of my colleagues across the way. Thank you.
Okay. Thank you. Thank you, Mr. Cullen. I'm going to take the next round, and then Mr. Katie will have the last round. I wanted to follow up on your presentation, Professor Tedds. I appreciated your remarks very much, especially with respect to the GST, HST credit, moving away from the opt-in method towards the assessed method. As you say, this is an important way to get money into the hands of low and middle-income Canadians. Are there other credits that we should look at in terms of changing the way we do it, so moving towards the assessed method? Are there other credits that you've looked at that we should do the same thing for?
The GST HST tax credit was an oddity in the way that people qualified for the tax credit. There is no other tax credit out there that required people to say, yes, assess me. Everything else is based off of information that CRA has.
Okay, I appreciate that. Next, I want to move to the mineral exploration tax credit, and we at the Finance Committee hear about this every pre-budget consultation. It won't surprise you, and we hear from organizations like the Prospectors and Developers Association of Canada, Obviously, they're very supportive of this credit. In fact, they recommend every fall expanding it. Now, their arguments are, and I want you to respond to their arguments, because what they present to the committee typically is that the federal government studies that have been done, 2000 to 1994, indicate that for every dollar of tax expenditure made, it generates $2.6 in new exploration spending. Further to that, when the committee was I believe in Whitehorse, the junior mining companies were even stronger in saying, if you remove the tax treatment for the junior mining sector, because it is a very risky endeavor. I mean, it's less risky, obviously, as you move up towards the existing mines. But for actual exploration, if you remove this tax treatment, you will, in fact, cause serious harm to the amount of exploration going on, which then the juniors obviously feed into the larger companies in terms of mines. So, I want to sort of get the full debate out here, so I want to give you an opportunity to respond to the arguments that they make before the committee each fall.
Well, I think it's important to separate out the basic flow-through share system versus the additional METC, which is what we call the super flow-through share system. So the federal government studies that have been done, and there has now been 2 of them, as well as 3 academic studies, have all just focused on the flow-through share regime. There has been, and including the latest study by Department of Finance, which was in 2013, there has been no focus on whether or not the METC tax credit has resulted in any increased exploration. And when you look at the activity that's going on that has happened since the METC has come in, there does not appear to be any evidence that the METC causes any additional investing behavior as opposed to simply subsidizing investing behavior that already occurs under the flow-through share system. So it's just an added, and the METC is effectively a grant to investors. All it is doing is putting money in the hands of investments that are already occurring.
So when you separate the two, are you in favor of keeping the basic flow-through share but removing the METC? Is that your position then?
This is tricky because it might get me into a little bit of hot water. No, I don't have a lot of favorable things to say about the flow-through share system. I'm not saying that the mining and exploration industry doesn't need some vehicles in which to help encourage people to invest in them, given the nature of the problem. However, I do believe there are better vehicles to use other than the flow-through share and super flow-through share system.
Because I see some of your statements that you say on the investor side, the METC subsidizes high-risk investments and appears to be predominantly used for tax planning purposes. I mean, their argument would be, they wouldn't argue with the first part of your sentence. They would say it does, favor high-risk investments because that's the nature of that industry, especially at the junior exploration level. If you look at the METC, it's been in effect since 2000, but it was phased out in 2004 to 2006, I believe, and then it was brought back. Have you done any studies of the years that it was not in effect to see if there was a downturn, in fact, in investment in the junior oil and gas or junior mining sector?
When you look at the data at hand, there was absolutely no decrease, and in fact, there were increases over those years where the METC was not in play. And that's because mining prices were increasing predominantly. That's what drives investing behavior is the prices.
So the price drives it for both the larger mining companies as well as for the juniors?
Yes.
Okay.
So when it comes to the tax planning purposes, we know there is a tax planning element. 90% of the investments happened at year end, which is an indication that it's being done for tax planning purposes.
Okay.
So this isn't something that people do over the year.
Yeah. Well, we may have you back in the fall because as this committee gets, presented very strongly with arguments in favor of, so we may have you back just to have a more fulsome debate at the committee when we do our pre-budget consultations. But I appreciate that very much. I'm going to go to the final round for Mr. Keddy, please.
Thank you, Mr. Chairman. I'll try to ask what I was not able to ask in the 30 seconds of my question, because those of us from Atlantic Canada just take longer to say things, that's all.
Well, Mr. Allen is slow.
Yeah, but Mr. Allen is in that New Brunswick end now. It's a different thing altogether. Honestly, Mr. Howlett, the offshore tax evasion and non-compliance has a extremely high level of sophistication. There's an underground economy. It's hidden. Wealthy individuals pay a lot of money for people who are very good at hiding tax dollars to hide it. So by the very nature of the beast, it's difficult to deal with, and that's what I was trying to say in my 30 seconds, unsuccessfully. But the offshore tax informant program looks as if it's going to be one tool in our tool basket to actually help combat this. And I realize that there's the results are still to be seen, but I do have to take exception with your statement that we have fewer auditors, because the reality is, since 2006 when we formed government, we have 400 more auditors today than we did have. So if you can tell me where that information is coming from, maybe we can work positively on our side to correct that, because we do have more physical auditors on the ground than we had.
Well, that's not the information I've seen in government answers to order paper questions.
Yeah.
About this. So it may depend on what year you take as the comparison point.
Well, maybe,
but the information I've seen in order paper question answers are that there is a slight, not a huge, but a slight decrease in the number of auditors working in the international and aggressive tax auditing sections of CRA. Now, if I might make one additional comment on the offshore tax informant program, to commend the government that they set the Canadian case threshold at $100,000, where an informant might get a reward, which is a lot less than the $2 million threshold in the United States. So that could help to encourage more informants to come forward.
Yeah. Thank you.
And I think even though the Canadian rewards are lower at 5 to 15% as compared with 15 to 30% in the U.S., that measure is, one which will probably make the Canadian program a bit better
thank you for
than
that,
the U.S.
But I just want to continue on. I'm going to check the questions on the order sheet, because the reality is we have 400 more auditors than we did have. So maybe it's an interpretation of what exactly the question was or how it's been answered. So I'll check that. You made a statement on the money collected in the U.S. in their offshore from their offshore tax avoidance accounts, and I'm not sure if I caught the number. 3.67 billion.
No, 367 million.
Okay, so that's correct. And again, we've gone through 8,195 international tax cases. We've identified and are collecting an additional $5.15 billion in taxes from those offshore accounts. So even with a new program on the tax informant, we've got a better record compared to population than the U.S. does. And that's with the old system. So that I find a bit surprising, but I think that it's not a bad thing at all. And only the final comment, Mr. Chairman, just from Mr. Rankin's discussion on the Auditor General. I think it is worth repeating that the Auditor General's report, and it's there for everyone to read, confirmed, and to quote the Auditor General, that CRA's aggressive tax planning program has the tools to detect, correct, and deter noncompliance. That doesn't mean we can't do a better job. It doesn't mean we shouldn't try to do a better job.
but it means, and I think our record compared to the U.S. is something to be applauded, and of course improved on. My final comment. Thank you.
Thank you very much, Mr. Kitty. I want to thank all of our witnesses for being here, both here in Ottawa and Victoria. Thank you so much for your contributions to our study of this piece of legislation. Colleagues, I hope you have a good weekend, and we will see you back here in Ottawa on Monday. Thank you so much. Meeting adjourned.